yeah, I just will go through why you should never look here for an sell, which a lot of you guys did. That's very important, but I will make it quick because yeah, that should be very basic for everyone, pretty much. And obviously, I don't want to how to say it. I don't want to be offensive or whatever. But if you look at oh, who muted me? Esther, what that was that you?
Sorry, I was just trying to make sure everybody can unmute themselves.
Oh
Just
yeah.
Oh, okay.
sorry.
Wait.
How long did you not hear me?
No, I heard you. I heard you. I was just
Oh,
like trying to unmute. So wait, do you mean like you're not supposed to take like POIs that yield a large reaction like this?
no. So first of all, if you see something major like this, like
Yeah, equal
you
highs.
can
Yeah.
call it double top, you can call it whatever, you should never, ever take a look at a POY in here. Never do it. That's the biggest mistake you can do ever, period. And in your whole trading career, that's probably the biggest the biggest mistake you could ever do. It's like to look at the POY on a double top or double bottom. You will get stopped out so many times because you have to think about it, like how much liquidity is lying there. Like there's so much liquidity lying above there, and you all know the principle of like the FU candle and stuff, and that's basically it. That's an FU candle, and you all got FU'd pretty much with this candle when you took this sell over here. So you should never look on a double top or double bottom or whatever you want to call it. You can call it liquidity. That's probably the best fitting word for it. You should never look in a POY over here. For sure, it looks good on the edge. If you just go through the 5 minute or whatever. I mean, sure, you can pull something out of your ass here and say, yeah, that's my IFC or whatever. But you will get crushed because you don't see the bigger picture and you don't see that this is just trading into the trap zone, which is exactly this FU candle. And it will take out this highs for sure, like no doubt about it will take out this highs for sure. Probably this one too, so you look for a POY over here. So if you want to take this short and look for POYs, you should not look at this at all. You can look at this one or at this one, but the best choice is obviously here, because if it is in an FU candle, why it should stop like FUing this liquidity here? No, it will take probably this out too if it's on a run anyways. So look for a point of interest in here, which is way better. Obviously, it did not play out really much. I'm looking at the same thing as you, Ryan, but it was waiting. Yeah, exactly. So hopefully you did not look at this one. I mean, it's good if you really want to trade like counter trend for a few pips or whatever. You can do that, but obviously that's not what we want in the long run. So if you want to hold like the 1 to 20s or 1 to 10s, whatever, yeah, don't look at this if you're trading into a high liquidity zone into there. So yeah, this is not really a great point of interest too, but at least this is the high of the day. So I'm still in this sell right here. I mean, I took it from the 1 minute. Can just show you quick, but I will then leave GJ because it was not so pretty today overall. There was prettier pairs and we will walk you through from there on. So
And
if you look,
actually, what I also saw was on the
yeah,
daily that we had bullish structure. If you look on the daily,
okay. Oh, let me move the chat here.
yeah.
Yeah,
So
there you go.
yeah, so it's like right. I can't really annotate, but
Yeah, so
yeah.
so that's pretty much like the FU candle, like how you learn it, right? Like the
Mhm.
equal highs and stuff. FU candle probably will take out this, what it did. Yeah, and if you look at it daily, there's so much imbalance left over here. So why should this be the high right here? I mean, it probably, if you only look at the daily, probably will go all the way up here. So, but that's just the daily looks, but we don't do that right now. So just to show you like how I put my high of the day, and how I took this entry, which is a little bit complicated too, but just to give you the concept so you can understand a little bit better, because it will play a huge role of your trading career. So always if you see like these double tops, always expect like dollar signs or euro signs or wherever country you're coming from, like the currency pair isn't there. Always see this as money grab, okay? So they will always induce these points. What do I mean by induce these points? They will always ping the top because breakout traders like placing their buy stops over here, right? I mean, the guys who sold this probably put their stops over here. So if they ping it with a wick, they do pretty much do two things. So what are the two things? First of all, they induce the breakout traders going long, and second of all, they stop out the guys which put their stop over here, right, and did not put it at break even. So always keep that in mind. So if you take a look at this, what is this? Is again like this equal highs. You can call it whatever you want. And on the 1 minute over here, that's your last point of imbalance, right? I think everyone can agree with that. I can recognize if it is an equal high or mitigation. Like a mitigation always comes from a trap zone or whatever, but equal high is formed on purpose. I will show you examples like in a minute. I show you tons of examples because today was a slogfest, man. I mean, it was crazy. I mean, there was like 50 high high valuable trade setups even on 3 pairs, which I will show you all. It's like crazy. I mean, you could do like 5,000% today. I'm not even kidding. So just bear with me, I will walk you through. So again, if you see this, like this, the last equal high, right? You have this, you have a little bit further to the right. I mean, I showed you on the 1 hour, you have all this liquidity building up there. And above this all liquidity, which I showed you on the 1 hour or 2, is this little imbalance here. So if we just could come above there, I mean above the points which I showed you on the 1 hour, and tap into this imbalance zone, that would be pretty good point of reversal for the day. And if we just go back to the 1 hour.
Can I say something real quick?
Yeah, sure.
What about if you go back to there, it looked like there was equal highs above.
On the 1 minute?
I think, what was the one that you were just on?
Yeah, just go. Let me see.
So you said if it was like tapping to an imbalance.
Yeah, exactly. So yeah, there you go.
Yeah, like you see if you zoom out a little bit, see the liquidity building up on top, that very high there.
Oh, you mean up there?
Yeah. What do you think about that?
Yeah, that's good. That's probably for tomorrow. So
Okay.
you have to keep in mind if they will take everything out, like in one day, like that's not how it works, right?
Mhm.
They have to play in days and hours and minutes, and it's all built on candles and whatever, right? But if they just put everything, I mean, if you can you can take a look at this. I mean, obviously they could just crush it with one daily candle or whatever, but they can't do it. It's ADR. I don't know if you ever heard about that. It's the average daily range, which our institutions have pretty much. They can't move a pair like 5 trillion pips a day. They just cannot do it. They're not allowed, first of all, and second of all, if they do it, I mean, it would just collapse everything. So they have an average daily range, which they are allowed to move a pair during the day, okay? So, but if we go back to the 1 minute, so I'm just saying that this is a very good point of interest, right? I'm obviously, if I see that on the edge, I'm not 100% sure anyways. I'm just saying if you put the confluences of events together, like the liquidity zones, the bigger picture, the FU candle and everything, and then it taps into this imbalance right here, then we made sense out of it, right? It's not we're guessing or whatever, but it makes sense now, what they're doing. So take out the liquidity, stop the guys out which took it short, induce the guys long and whatever, and tap into this imbalance zone. And it's enough if they only tap it a little bit. They don't need to fill this whole imbalance. It's enough that they just tap into the zone because they in a such highly or great money zone, if you want to call it. Like there's lying so much liquidity in here, so it's enough that they only tap into it. And that's exactly what they did. So they tapped into the zone by a little bit. So I saw that alert goes right in this zone. I got my alert, see the huge reaction from it. I mean, not really huge, but I mean, you can see what I mean. And you just can enter it on the retest basically. And you can see this IFC, you can say it's mitigated with this wick. I don't see it like that. So entry goes straight here, which I did exactly like that. Stop can go above this. I mean, if you want to make really sure, just put it up there. If not, then put it above the high of the day, which I did. Yeah, and there we go. But obviously we're still messing around here, so it's going sideways. So yeah, in my opinion, it's not a good trade at all. It's, I mean, what is it right now? Yeah, it's only like 1 to, what is it? 1 to 8 right now. So yeah, no big deal, I guess. Okay, let me just go through questions here real quick.
Yeah, I feel like the long would be good because see how it FU'd and then it just tapped into that imbalance. Yeah, right there.
Oh, right there?
Yeah.
For a buy, you mean?
Mm-hmm. Do you think that was a
Yeah,
good
I
trade?
mean, we will go over this stage of today because there was some beauties in this stage. I mean, good eyes. Glad you caught that. But if you just look at the bigger picture, it would be just nice if this thing dropped. But again, it just messes around. I don't even know why. But probably there's a reason for it. But yeah, that's good. That's a good point. We will go over this in a second. I mean, not in this pair, but EU, GJ, not GJ, GU had pretty amazing setups in here. Okay, let me see. Just above his
We basically always wait for like the FU usually because there's always liquidity built up.
yeah, if you do that, that's very good. So you always on the good side if you always wait for the FU candle, because sometimes you're getting too excited and getting in over here or whatever, and then the
Mhm.
FU is coming and you stop. You get an unnecessary stop order or whatever. So it's always safer if you wait for the FU, pretty much on every setup. Sometimes
Yeah.
obviously the FU will not happen and then you miss the setup, but so be it. There are so many opportunities and I will show you in a second.
Okay.
Just
So
let me follow up.
Mhm.
Yeah, sorry.
So I was gonna say like if you don't see an FU but you see very clear order flow, would you take it?
I always combine it with structure. Like for
Yeah,
example,
structure.
this, you can see this even on the 1 hour as a huge FU candle, right?
Mm-hmm.
I mean, you have
Yep.
this liquidity, even this one, and this candle just pings everything. So you can
Mm-hmm.
call this a higher time frame FU candle for sure. So just if you look at this should play out really nicely. But then again, if you look at the higher time frames and whatever, I mean, we have so much room to the upside and whatever. Again, yeah, we could go higher, but that's why I do intraday, not really swing, because I suck
Yeah.
at swing, so I do intraday.
Mm-hmm.
So yeah, but you get the point, right? So let me see. But again, obviously, if you want to combine it with like these high risk reward trades like the 1 to 100s, obviously you have to take the POI from the 4 hour or daily or whatever. So that's not like, this will not play out like a 1 to 100. I know that like right now, right? Because it's not playing from a huge point of interest from the higher time frame. So I will not hold this for 1 to 100 or whatever. So I hope everyone sees what I mean by that. So if it's based on intraday, obviously we combine it with the 1 hour stuff. But this would probably, I mean, we could go over here, but I don't anticipate it, right? I don't want to anticipate. I want to see what price action does, and what I see right now is just messing around. It does nothing. Just goes sideways or whatever. But obviously GJ can move in Asia, so we will see what Asia does. If it takes me out of break even, yeah, I mean, I don't care. So just let me answer some questions here. Plus institution went further than the, yeah, exactly. So that's very important that you understand that the institutions have an ADR, an average daily range, and you can see it on pretty much every pair. Obviously, sometimes they crush the ADR by a little bit, but that's why it's an average daily range. Then on another day, they don't move the pair so much. So you have a weekly average range and a daily average range. And if you just keep that in mind, yeah, you can crush it only based on that. How comes you entered there without even an 1 minute break of structure? Good point. And it's the confluences of events. First of all, my daily cycle said it is done anyways. Okay, so I anticipate that the high of the day being in this area anyways. Okay, so I know that just based on my daily analysis how I do things. And then I have my area where I look for IFCs because my intraday cycle is done, and then I look for IFCs and combine everything. And again, you have this this higher time frame structure, which gives you the FU candle and stuff. So you don't really need an lower an M minute break of structure or whatever if you take the extreme. And again, I took it on this. I mean, I did not take it on the straight tap into it. I waited for the reaction, and then after the reset I take it. So now again it makes sense because I know exactly where my stop goes, and if it takes it out, then probably it will give me a pattern or whatever, like a break of structure, FU candle inside this area anyways. So what is my risk here? I mean, I risk 2 pips for a really good confluences of events, right? So even if it takes me out, it will give me another reaction and I will take it then. So it's not a big deal anyways. Because again, the risk reward is so great, you can mess up a little a few times, but obviously if you know what you're doing, that's not the case too much. So, and if you're yeah, exactly. Or weekly daily range, that doesn't make really sense. What's weekly daily range? It's a weekly average range or the daily average range. Or if that's what you mean, Esther. But yeah, it's like a weekly average range and a daily average range. Could you also go over what makes a good POY? Yeah, a good POY, that's a very good question. A good POY, because I see it a little bit different, and that's why I see, or how I see guys having a lot of troubles as well, because I went over this in a few other presentations I did. Where can I draw? Esther, can you activate that I can draw? That would be amazing.
Sorry, what did you say?
Can I draw in the Zoom? Can you
Oh,
activate
yes, you
that?
can. Yeah, you have a co-host, right? You can do whatever you want to do.
It does not give me the option. Like,
I mean, you
No,
can just draw using the drawing tool.
yeah, you can. You have all the rights.
okay.
I mean, there's like a drawing tool in TradingView that you can just draw with.
Okay, I don't see it in Zoom, so let me do it like that.
Yeah, right there.
Yeah, I
So-
think the Zoom one's turned off.
So what I see a lot of... Sorry, what was that?
Yeah, I was saying I think the Zoom annotation thing's been
Yeah, I
turned off.
want to do that, but it
Oh,
does
okay.
not.
Hold on. Let me check. Hold on.
Yeah, I don't have to. It would be better because I don't like this trading view stuff here. Suck at it. I can even delete that. There you go.
No, it's fine. It's not turned off.
Yeah, it does not give me the option. I don't know.
That's
I mean, if you don't like the TradingView one because it's hard to delete, you can just do like Control and then drag it over and then delete everything. Because that's like I know that's what bugs me about this.
What do you mean control?
Yeah, so like just draw something and then draw multiple things, right? Okay, just
Oh.
draw again. Yeah.
Yeah.
And then you can like, if you like press Control and then you drag over both of them,
What the heck?
and then you have to like go to the pointer first.
Yeah, okay. But I figured out like when there's time for that. I will probably like we
It's
can
really
do that.
easy. Okay.
Because you have to know I don't use TradingView for like analyzing or whatever. So yeah, I suck at it, so just bear with me. So what a lot of you guys always do, and which does not really make that much sense, is you see this like an IFC, you want to see this to happen, then you have an IFC over here, then you want this to happen, then there's an IFC over here, and you want this to happen, then there's an IFC over here, then you want this to happen, and so on. I mean, it cannot even work like that, right? But still, a lot of you guys try to do that. So you see like a drop, and then you want to trade an POY over here. And then you want to trade this POY, and then you want to trade this POY, and then this. And I mean, it does not really make that much sense. And again, this is not an offense to anyone, but just you have to understand that the market, I mean, how would it look if it would do something like that? It does not even make sense. So what makes a really great POY then is if it induces a lot of liquidity first. And you can see pretty much on every great POY, it induces something first. Like, what do I mean by induces something first? Again, like, just say, you have this equal highs here, right? So this induces so much liquidity over here, over here, over here, and then taps into an POY. So this is a better POY because it lies over liquidity. So it has to induce and trap the liquidity first and then taps into this POY. That's what makes it a better POY in my opinion. And if you backtest it, it works out pretty much very good. If you combine it just with that, but again, I will show you a lot of examples, like in a second when we're done with GJ. A lot of examples. Yeah, guys, okay, it's not critical for you entry. So break of structured. I mean, I will show you examples like in a second of the trades I took today because it's a lot of trades, and then that will clarify a lot of things. So what's your hit rate like? Yeah, it is pretty good, the hit rate. Again, obviously I get stop outs, that's for sure. But again, if you just get 1 to 10 risk roll, you can be 10 times wrong in a row. And obviously that does not happen at all. So, and for intraday, on which time frame usually determine POY? Yeah, we will go through intraday setups right now. I just wanted to clarify out why you should never ever take a POY over here. Never do it. If you see equal highs or whatever, never choose a POY here. Never. You will get burned every time. I can promise you that. So that's not a good idea. Okay. So hopefully everything is good with GJ because I wanted to do some intraday stuff now. So if nobody has any more questions about GJ, because I will show you some stuff which blow your mind, okay? So just start with EU because EU, gave some good stuff. Okay, so EU was pretty much funny today, but the craziness will come when we cover GU and AU. And yeah, probably some minds will be blown, but it's real. I mean, I don't make it up or whatever. It's real. You will be freaked out, I guess. So just start with EU, okay? What do we have on EU? Just say we want to start at obviously London. So what do? We go to the 1 hour. Let me remove that all shit. So where's 8 o'clock? What is it? There you go. Oh, there you go. Okay. So no, what is that? Let me double check that. Oh yeah, okay, it's fine. So we can start with the 1 hour. We can even start with the 4 hour because some guys prefer that. So London starts obviously here, right? So if you look at the 4 hour, what we're trading in the range. So we have really only this POY over here, this IFC, and this, but we already covered into this, right? So this is not a POY anymore. So right, technically, you don't trading into the 4 hour time frame right now because that's not on, we don't really tapped into this POY. I mean, we tapped in already, but this is, we're already inside this. So the next POY in a 4 hour would be this above here, right? So we just need to keep that in mind for areas if it goes there or if it could go up there for reversals, right? But there's not really a 4 hour POY other than this, right? So we can mark this one out. Just let's do that. So just give me this POY here, boom, okay. I hope everyone knows why, I guess. I hope. So this is obviously the 4 hour POY and this is where London starts. So now the fun can begin, okay? So I break it down to the 5 because that's the most clear time frame of all from me, okay? So and if you just do that. Okay. Okay, let it play a little bit. Okay. I have to remove the chat real quick, guys. So if there's questions in the chat, I will look at it in a second. Because I don't see the thing then. And yeah, I don't really use that tool, like the trading view thing. I only use it for like a couple of days now. So if I mess it up or whatever, just bear with me because I never really do that. So yeah, if I do something crazy or whatever, I need help, just bear with me, okay? Okay, so pretty much what we have here. This is like London. And like I told you, London will probably always start with like a false move, a trap push or whatever. So this is a very important time where we are right here, right? Because why? Because London is where the liquidity of the whole world starts pretty much going into the market. So their interest is that they put a lot of liquidity in. Okay. So why? Why is it important? Because all the money will start pulling in. So what they do first is, boom, they induce first of all this guys over here, because this is like a break of structure point, wherever you want to see it, but it is not. It is just a false, a trap. You can call it whatever you want, but the answer is that is a false break of structure. I mean, if you look at Asia and whatever, it will all make sense, but I just wanted to show you some examples today. It will get clearer now, just bear with me for now, okay? So what you have here? Whoops, can I stop that? Yeah. Okay, what is this now? You have this break of structure here, and this is your last really clear IFC. Okay, you have an imbalance here. So now timing plays into our favor because we are exactly at London, 9 o'clock, right? I mean, that should be London for you guys. It's 9 o'clock for me because I'm based in Bavaria. So that should be London. So that's exactly where the trap started, right? The trap move happened in London. So if we mark that out, just this IFC based on the timing, I mean, if you would know nothing, if you would know nothing but the timing and the trap, which already happened, I mean, by trap, I mean inducement. That's why I said before, it has to induce something first to be in great POI. It induced this right here. Then timing is in our favor. And now we have an IFC here. We break it down to the 1 minute. The IFC. And look what we have. Boom. We have this beautiful, beautiful IFC right here, right? So you could easily place some pending on this thing here, because what you have here, this is your equal lows. So it will get FU'd. And where does the FU candle get into? Yeah, right, the IFC. Easy, right? Look at it. It's not that difficult if you know what you're looking for. Boom, you can easily place an buy here, stop goes below these candles, and I mean, you're up like, what is it? Like a 1 to 10 in like, not even like 5 minutes. I mean, how complicated does things need to be? You have the timing with the London open, you have the FU candle breaking this equal lows, you right into the IFC candle. 1 to 10 in 5 minutes, okay? Okay, so I mean, everybody sees how easy it could be actually. And we only put in like, what is it? Like timing, structure, and IFCs. Only 3 things we combined so far, and we made our first 1 to 10 in 5 minutes. I mean, what do you want? But again, obviously this will continue. Because what we learned from the 4-hour or the higher time frames, our next POI should be here or here. So our target should not be inside or whatever here. So we could aim for this or whatever, right? Just to keep it really, really simple. So now all of a sudden, out of a little trade, we're already up 1 to 23, like in a matter of minutes, based on very, very simple stuff. I mean, it's not complicated, right? So that's a very good point of taking something out. Why? Why is it a good point? Because obviously the market will not go up and up and up and up and up and up. Sometimes obviously it does it, but most of the time it does not. It will pull back. It will pull back, that's for sure. So what we do if it will pull, I mean, it probably will not pull back right now. It will probably induce this one first. Okay, so we could set our target inside this area, our first partial target. Okay, you can do that. I hope everyone agrees. Why? So let's put the target, I mean, yeah, so partials out. Well, let me just check the chat here quick. Is the chat agreeing? I don't know. Because that should be a little learning lesson or whatever. Someone agree, someone no, I don't know. Talk with me, talk with me. Do you agree?
Yeah, I
if you
agree.
put
I agree.
Okay. Okay. Okay.
No,
So
it's
I
good.
hope
Like
everyone
sitting
sees.
targets also at areas that break that
Yeah, so again,
take
the
out
same
liquidity.
thing goes with when it, before it pulls back, it will induce something first. Because why should it induce first if it does not induce anything? So we have this critical points here. Obviously this false IFC, which probably some guys unfortunately looking for sells or whatever. That's wrong. Don't do it. So our first target should be up there. Around in, yeah, probably I would take it personally up there. So makes it a 1 to 30 easy. And then we expect a pullback, okay? So we get pinged 1 to 30. So we can pay ourselves for the day. I mean, you can close it even if you want. It doesn't really matter. So you're up like, yeah, 1 to 30 in like 1 hour. That's not a bad start for the day. So, but just expect that we have to pull back, right? So we could look for re-entries after a pullback or whatever. So this would be a good zone. I don't like it. Why don't I like it? Because the pullback, again, same concept. It has to induce something first to pull back up again. So we induce this thing here, which probably some of you guys looked for a buy. But it was not a buy. It has to induce something first. It does not really inducement any. So I don't look at this. I don't look at this. I just don't do it. So yeah, if you would.
Now since there's equal lows, you could look for a PY under there now.
Sorry?
But now that there's equal lows, could you look at a PY under it now? Like if it comes back?
Under here?
Yeah.
Yeah, for sure, but obviously only here in this area.
Yeah, because that's like the most extreme, right?
Exactly. So if you want, so you'd have to check this, and you see this imbalance here, right?
Yeah.
So just to get filled the imbalance, I mean I don't use this one because why? This is a wick over here, so my imbalance is this. I mean you could put it down there, but that's, I call it a little bit too over refining it. So if you do that, you have a good chance of being missed by a trade because the imbalance technically is filled in this, and that's just based on my experience and my back testing of things, okay? So obviously you can highly disagree with me on this one. I don't really care, but I did my chart work and back testing or whatever, and I call this then a good imbalance point to look at for this. If it pulls back, it will not go to this one. No, it will break this one. Why? Inducement. So what's the last POY, last imbalance, is this one. So if you want to place a new buy, do it here. Stop can go. Yeah, it has to be a little bit bigger. I mean, I would wait. To be fair, but you can do it. But if the stop is so big, I won't do it. I will wait. But just for argument's sake, yeah, you could place a pending here. But for me, that stop is just too big. It is just too big. It only gives you in 5.8 just to cover this. Yeah, for me, it's too big. You could do it, but for me, it's too big. I rather would wait for the reaction. So if you can watch it play out. So it breaks this. So we have a break of the structure, which is good. So we can even watch it on the 5-minute. What it does. What it does. How so? You mean what, Tim? How so?
Oh wait, I'm talking about the liquidity void thing.
Oh, liquidity voids and abilities are the same thing, though.
Yeah, that's what I was saying.
Oh, okay, that's good. I'm glad you see it the same way then.
Yeah, see, that's the thing. Okay, so I actually took a sell here because what I saw was like equal lows, something that took out some liquidity and then went down. Obviously, structure was bullish, but I saw that we failed to create a higher high in this area. Like if you go farther in, I'll show you.
Okay. So, but just for argument's sake, we can mark it like this. Okay. So, and we should take out this. That's for sure. It should give us like a false, like equal lows or whatever. So that's why it's important to take partials too, right? Because you don't want to hold all through this stuff. And there you have like the equal lows or whatever. And why does it do that? I mean, you have to understand there's a reasoning for that. It builds up liquidity. First, like it induces this phase here, like people going short, believe it or not, because it induced this thing. But on the bigger picture, it is an equal low building up liquidity. It builds up liquidity in this zone, so we will break it later. It's all just a funny game, right, of inducement and building up liquidity and whatever. So there's like the FU candle, okay? You can call this the FU candle, because why? This is the equal lows tapped into our thing. So now we go to the 1 minute again. So
Wait, actually, one question.
Yeah, sure.
What if we thought that this was the FU candle, the thing that had already formed, you know? Because I saw a bullish structure after that. So I think a lot of people would think this is the FU. Like I can't really point it out.
Where exactly?
Yeah, like right there. I mean, if you can like, I wish I could annotate.
Like
Yeah, that.
This one?
Yeah.
Yeah, but that's not an FU candle. Like
Why
what
not?
did it FU? It only FU this thing. I mean, it's good for a quick reversal, but in a bigger picture, it just builds up like the equal highs, equal lows.
Oh, so you want it to go like a lot further down
Yeah,
and
I
like
mean,
tap off another
we will
POI.
tap into this thing. I mean,
Oh,
if
okay.
we will go down, this is the point to look.
No, but that's true because it didn't really tap into a POI, so it
Yeah,
doesn't make
exactly.
sense.
I mean,
Okay.
this is the POY, but again, that's the higher one. I mean, it
Mhm.
could reverse from that, but the better option is to fill this imbalance here.
Yeah.
I mean, it
I
could
got you.
be, I mean, it could tap into there, and obviously some cases, yeah, they do, but
Mhm.
it's better if you tap into that. But again, if you don't want to place a sell pending right away, just wait for the reaction and see what
Yeah.
happens. But like to FU thing and stuff and just trade the structure, I mean, if you saw this as the high or whatever, you can see then this as equal highs, this is the FU candle, and this is your reaction. So you easily could trade this counter trade, like 50% or whatever from the IFC, because now you're trading the structure. You have the break of the structure right here.
Yeah.
Right? Break of structure here. So this becomes your break of structure thing. This is your equal highs building up, FU candle, retest, so stop can easily go. I mean, but this is counter trend. You can do that for sure. I did that actually. So I'm not even kidding. So I took that, but just to understand that you're trading counter trend and your target should be, yeah, if I mean, this will be induced, so your target can be below here,
Mhm.
but probably not much lower. So this
Yeah.
is a good counter trend, but you have to know that you're trading counter trend now. Just to confirm for your FU to be true to you, you want to run, yeah, exactly. An FU candle is valid if it runs liquidity, if it runs a very, I mean, a good liquidity zone. I mean, it can be a lot of things. For me, like for example, it's because I'm trade sessions, it's the Asian highs, the Asian lows, the Asian midline. We will come to examples for that in a minute, because this actually was tapped into the Asia high. But I don't know if you guys trade with that, and I don't want to mix too much things into it. But the Asia high or the Asia low or whatever is an highly valuable or highly big, whatever you want to call it, liquidity zone. So there's a lot of liquidity lying in, and if it lines up with an IFC, it gives me just another confluence of events to be more sure, to give it a more probability to play out. So again, we have this counter trend sell here, which we can gladly take. Now we had built up this equal highs, and now we're forming the FU candle. Okay, we're forming it right now. So we watch price action, what it does. There's again, like liquidity building up. I hope everyone can see that. So we will take out this as well. Hope everyone can agree with that and sees what I mean by that.
Yeah, I see it.
Okay, so now we have this point, which probably will get induced too. Why? Because now we are in this, and that's, I see a lot of guys getting, yeah, doing mistakes. Because now you see this, and you mean like, oh yeah, it tapped into my IFC here. Yeah, now it goes. Let me jump on a buy. But notice what? There is an imbalance here. The imbalance is either here, but not here. So why should it stop here? It does not even make sense other than is once again a trap. Okay, and that's a little bit more advanced, but it is. That's exactly what it is. It's just a false trap. It will not be the true IFC because it will go down into this imbalance. Again, it will FU this thing and FU this things. So that's hard to understand at the beginning, but once you get a little bit familiar with it, you will understand it. So you see it goes and goes, people getting excited and oh yeah, oh my god, there we go. But unfortunately, it does not. And now you get stopped out and think like, oh my god, why is this not working? Oh my god, right? And why is it not working? Because it does work. It all makes sense. You have to see the bigger picture. You have this liquidity build up. Now you have this liquidity build up giving you the false thing, and this becomes your FU into this liquidity trap. It all makes sense. It's just how you look at things. So now you tapped into this liquidity right here, or you filled this imbalance. So if you put a pending order right here, which I don't like, just for argument's sake you did, you would get tapped into the tick. I mean, probably not because of the spread, but if you would calculate it in, then you would, right? Because yeah, obviously it has to fill the spread too. So depending on your broker and whatever, this liquidity gets now filled. Everything makes sense because we have a lot of fake outs and a lot of liquidity building up short now, right? So now, if you don't like this, wait for the reaction. Simply wait for the reaction after that. So you have this, break off the minor structure. Here comes your true IFC now. And that's a true IFC. It built up so much liquidity. That's the true IFC for sure. You put a pending order here and boom, you got tapped in. Easy. The only trap here was this thing.
See, I'm still like wondering how that was like liquidity buildup because it obviously tapped above.
Yeah,
it obviously tapped
just
to like a
think about it. A lot
POI.
of people, like smart money is not a new thing, right?
Mhm.
So a lot of people do smart money concepts and they're putting like pending orders here too. So this builds up liquidity, right?
Yeah.
But then it gives you the reaction. So it shows you that this is probably the right move. People jump on buys, whatever. Jump even here because they think this is the IFC, it gets retapped, they put a buy here and then they give the reaction and so on. So, but now it breaks the zone, so people lose faith, right? I mean, oh my god, why is it not working? Yeah, let me not look at chart anymore and stuff. So it's all based on psychology, right? And that's
Yeah.
exactly what it is. And if you look at the structure, at the bigger picture, you expect the FU, and the FU is called FU for a reason. It will fuck you up, like censor thing, right? And that's what it does.
Then
It did it right here too.
The thing is, like, how do you know which is the right one though? Because
Yeah,
like,
that's a little bit harder, but we will go over it in time.
okay,
Like, I can obviously not explain it like in one session or whatever. So, yeah, but just for now, expect this to happen if the FU, because, yeah, sometimes it will do that.
I guess just go for the extreme imbalance for now.
Exactly. But obviously then you will miss out a few, but it's always safer. Okay?
Yeah.
So now we tapped this imbalance. So pending, forget that for now because I don't like that at all. Two big stop. Now you have this one. Now you have a 2.5 pip stop, which is better. Okay, so let's see what it does. Okay. So again, you break this structure, which you want. You want this to break. What else you have? You have this structure. You want this to break. You have this structure. You want it to break. So you're looking at this area for possible reversals. Okay, this is a good area to look for reversals, but we don't do that for now. We're just looking at for partial takeouts. So you broke this. Whoops. We stopped that. So you broke that and you broke that. Okay, so now is a good time to partial out once again and look at again how quick it is. And you see if you catch the right move, it will be quick. It will be quick. So that's a good indication of how you know you're in the right move. So if this 1 to 30, like on the beginning of the day, which gives you a nice puffer, then I mean this a little bit advanced, let's not count that in. So let's say even if you take a loss here on this IFC because you get tricked. I mean, it's not a bad thing if you get tricked because it's a little bit complicated, but just say you would have been tricked into this one. So what else? You minus 1%. So you took this one, the second try, and boom. What is it? Where is the risk reward thing? 1 to 13? Again, in like 1 hour or whatever. So subtract this thing, so it's 1 to 12. So I mean, where's the risk here? You risk 1%, you got stop out here, you take this one, 1 to 13 in 1 hour. Everything's back times 10, right? So that's not bad at all. I guess you agree with me. So now if we watch what happens after that. So we partial out here. Probably we can close out because we will have an a major reaction from this on. Okay, but let me see what we have here. So we have this. Okay, I partial out here, I take profit over here, that's for sure. But I partial out here because I don't know 100% if it will break this. But yeah, it probably will though. But yeah, just let me not explain why it does. But yeah, the TTP should be above this, but I partial out here anyways because I'm not 100% sure in this example, but I remember that it did that, yeah. So yeah, that's a little bit cheating because I remembered that doing, but I partial out here anyways, okay? Just again, we have inducements to make a little bit more sense into that. We have an inducement phase over here. Why again inducement? It has to induce more buyers and so on. So if we break this structure, people will jump buys, have the buyers even more buy and whatever. So this is a very good sign for us if it breaks here. But now a huge pullback will follow, that's for sure. Because think about again, like how many people are jumping on buys here. Let me just check the chat real quick because I see some messages. Fair play, Grant. What? This is where I got short from today. 1 minute break of structure, like right here. Grant, is that what you're talking about?
Almost. It was just after that little drop down. It's just more the fact that New York didn't really tried to go above London, and obviously that failed, came down.
Yeah,
back
that's
to
a I missed that. I missed it by 1 tick. Like
Yeah,
I had
missed
myself
eBay
stop
this
right
morning
here.
by half a pip, so I thought I'd
Exactly.
go a pip better.
Yeah, there you go. That's a good trade. I mean, I had my sell and my pending, my sell limit. Obviously, I had it right here, but yeah, again, it was missed by not that much. But yeah, that would be a very good reversal trade. Glad you caught that, man. Cheers, man. That's a good trade. But again, that's like a good POI then because we have an inducement first. So if you look for something in here, obviously you combine it with this inducement first, so that makes it a better POI. So I'm really glad you caught that because that was not that easy. But I mean, it gave you a very good reaction if I remember correctly. Yeah, there we go. So okay, what do we have now? So okay, we have this down here. Okay, So our bias is still up. Our long-term bias is still to the long side, okay? So what we can do is look this area for possible re-entries and see if we would hold this trade, we probably run in the danger of getting a break even after like we're up like 1 to 14 or whatever it was. So that's not a good deal, so don't do that. So just partial out in this area, and if you like advanced as Grant, then you can take the sell. I missed that. So yeah, but you can do that for sure. But why? It happens after inducement, so it makes it better. So if we watch what price is doing after that. Oh, okay. What's that? Why is it so? That's better. Okay, just let me take a look at the chat. So basically you want a run on short-term high or low for Sahid, if you could specify that question, that would help because I don't really understand what you mean by that. Can you break down the short, please? Yeah, sure. So what do you have? Like you're coming off from this IFC, right? So the true bias is still to the long side. Like I would be happy if we broke this today, but we did not. I can give that right away because the day pretty much ended over here. So this is the trade we just talked at the beginning of the Zoom, where someone said that, sorry, I forgot your name, where someone said like we have a possible buy on GJ. We have a really good buy on EU, which we will cover like in a second, but the sell. So it's again a combination of things. So we have this inducement phase, right? So we expect the pullback. We just expect it. So, and if you have and again on the smaller picture, it is again like a FU candle. You can see that it's a equal highs FU candle into the POY. I don't even remember the POY what we had. Which one was it? I think it was, what was it for? It was higher than that one. It was not a clear POY though, so that's why I did not put a pending or whatever.
It wasn't really a clear POI to me. What
Yeah,
the
exactly.
when you're in the 1 minute chart though, that really large green candle, sort of after we've sort of made the kind of equal highs just in this afternoon's price action, a lot of the times when you see that, when we get up to support or resistance, whatever you want to call it, kind of thing, and then you see a really large green candle or red candle kind of thing, it doesn't matter which way it's going, but a really large one with kind of say no wick or anything on the top, and then it comes off after that. That's what I've always found in my kind of back testing is a really good indication. It's just, yeah, those candles that look really strong, but they're not strong at all. It's just bullshit.
Yeah, I see your point. That's a very good way of seeing it. Like glad you pointed out, but like I don't know if you were the one who took the short, right?
Yeah, this afternoon. Yeah.
So how did you base it on?
So as I say, if you go to this afternoon's price action.
Oh, okay. Oh, you wanted to take it like I would have played it, like after?
Yeah. After. I didn't leave pending order. No, I don't leave pendings. No, for sure. It's just simply so it's come up. It's run the London high, and as I say, if you look in at that big kind of FU candle, the one before the break structure, that for sure, that's what I'm talking about. They're the ones that once you see that big kind of push up and then it fall off, break the structure afterwards, they're quite an indication to me that this is some kind of fuckery going on. There's some kind of
that's
money shit going on.
Great you saw that, because you have again, like if you want to see it like that, the break of structure, which gives you this, like that's the break of structure thing, and then it would ping right into the IFC, which unfortunately it missed by a pip.
Exactly, man. That's what I was saying.
I'm glad you jumped in because I actually wanted to market order this thing, but I thought like, it's so close. I just wait, and then it went off, and then it was like, fuck, it's too late now. But
I missed the one.
Then I watched this again. I watched this, and again it was like one tick away, and then I was kind of angry because that shit.
the thing is with that, right? You noticed obviously because we were bullish that they've left those imbalances kind of thing.
Yeah, exactly.
There was also a couple of equal highs and stuff later on. Like it all starts to make sense. Like obviously my partials have hit break even kind of going on afterwards. But I mean, you're still closing out like a 1 to 4 for me. That's fine. Like, I used to target 1 to 4s anyway. So
Yeah, I'm so glad you caught that though, because that's a beautiful trade.
exactly.
I hope everyone sees that as well, like the equal highs and the FU candle. And if you just place it again on structure, you have this break of structure and then this retest. And the ideally thing would be the retest, which unfortunately does not happen. But yeah, that's just part of the business. You miss out the few. It is what it is. Otherwise, you jump in with a market order, which is sometimes a very good idea. I sometimes do that as well, but in this case, I did not. So yeah, I missed that one, and then I looked this one, and I missed that one too. So yeah, I missed out 2 great opportunities, but I'm glad at least if you got it. So that's good. But what is the hyperbolic scenario again? Like if Jovan was calling it out. So hope some of you guys paid attention in the chats. So basically, yeah, I covered that. Can you break down the short? Yeah, I did that. Oh, that makes sense. Okay. When do you choose to go for the market order? Yes, that's a tricky question because that's sometimes a little bit, yeah, I don't prefer to do that, but yeah, sometimes I do it exactly how we just discussed. Like if I see my pending gets missed by a tick basically, and then I see like the 1 minute candle is moving away, then sometimes I think like, yeah, fuck that, and I jump in with a market execution. I just do like fixed lots on those because yeah, I don't have time to calculate the exact loss and stuff, so I have fixed lot sizes if I do something like that. But yeah, in this case I did not, unfortunately. But yeah, that's the only thing you can do about that. If your pending gets missed, you have to jump in quick. But again, obviously then you run into the danger that it comes back and taps into your point of interest anyways, or your IFC, and then you're pretty much double positions in. That's not a bad thing though. Just you have to keep in mind that you're risking a little bit more then. But yeah, you can do it. If you see it get missed and get your action, yeah, you can jump in, but sometimes it comes back. So yeah, I don't do that often anymore, but I did it like a while back ago. So yeah, but you can do that too. So okay, we had this cells if we want to manage it. So but we have to know in this area we have to get out. Because why? We have a really strong IFC once again. Okay, so we watch price action, what it does in this area. So what we have this beautiful IFC. So we easily, and why it's an extreme, what do I mean by extreme, is if it breaks this, it can go all the way down here, right? So you can jump in on a pending order right away or wait for the reaction, however you prefer. So if you want to make it more safe, wait for the reaction. If you're more like a riskier type of guy, you can place the pending order right away. So just anticipate me doing that because I did that because I'm crazy. So you place a pending order right here. Where was my PTP? I think it was right here. So I targeted like a 1 to 10 for the end of the day, not a bad thing. Let's see how that played out. So pending is set, so you see you're getting the reaction. Okay, so that's beautiful. I love when something like that happens. So what is that? I think everyone knows by now what this is. This is build up liquidity. So it's just on purpose, once again, if price comes here again, people short this thing, and if, yeah, but we will break this thing for sure. And this gives us liquidity to move the market even higher. That's good. So there we go. Now you have this build up equal lows. I hope everyone can see. And now everything makes more sense and sense, right? So now you have this equal highs, equal lows, everything is get built up. So now we're getting the sense into the stuff. And boom. It taps. Gives you a little bit shaky hands. So yeah, that was close for sure. But it's just what it is. So yeah, sometimes you need to have shaky hands for sure. And yeah, I think it was even this one, if I remember correctly, in a 5 minute. Which one it was? No, it was not that one, sorry. Oh, no, it was not that one. Okay. Sweaty palms, yeah, that's exactly what it is. Okay, what do we have? So now, that's great. I like that one, I took that too. But just again, should not do that right away. I put a second buy here because yeah, I was just a really good amount up for the day and I thought like, yeah, what else? I don't care. So yeah, I got tapped into this one as well, which is not that bad. I hope everyone sees why. And yeah, the day pretty much ended slowly but surely. And there we go. I think he closed it out right over here or something. Yeah, because it's just a little bit late and I don't want to hold it for the during the night anyways and whatever. So this one gave me like what was it? Only a 1 to 4, so not really something to mention, but just to see and give you like things which would have been possible only in EU. And we will go into the freaky stuff, so that's just like a tip of the iceberg, just to see what you could do in one pair on EU if you just have a little bit of understanding of things. So you have this 1 to 30, this 1 to 16, this 1 to 30. Yeah, I just for argument's sake, let's say we missed that one, so this, yeah, 1 to 7 at this stage and this 1 to 4 at this stage. So that's only EU, right? And that's only one day, so just keep that in mind. And I'm seeing we're running a little bit late, but yeah, we can do one more pair if you want, but let me just answer some questions here.
Actually, I have a question real quick.
Yeah, sure, go ahead.
So basically what you look for is like structure points that have a complex pullback with like an equal low or an equal high of some sort, and then you expect it to reach that, come to the extreme, and then take off from there.
Yeah, exactly.
That's like
for
generally what you
example,
look
you
for.
have the idea like before. Like for example, this, you see this IFC, right? You can see it like after it happens, right? But in this stage, you can see how how they're building the sense into it. I mean, they give you this equal highs, this false pin, which does not really ping into it. Like the guys which can't wait jumped into here in the buys, right?
Mhm.
And then it gets stopped out or whatever. And then
I
you
guess
have
what I'm
this
asking though.
equal lows and then the FU candle. So
Yeah.
it all makes sense. So the better trade even would be here. After but obviously I did not knew that, like that they will create equal lows. But if you see equal lows building and then the tap into it, you easily could enter this here again, like
Mhm.
based on the FU. But you see it builds, the sense getting built into it. Like we knew we wanted to buy it over here, where all this did not even existed. But then they built the sense into it. So you can have a really good journey and see how they're doing it. It's pretty funny.
Yeah, because what I was basically asking is, do you still prioritize structure over everything?
Yeah, just to make it a little bit more clear, I mean, I just only don't do that. I have my intraday stuff all built into this as well.
Mhm.
But again, you can just see how everything makes sense, like how I explained it, hopefully now.
Yeah.
Just
So
based
even
on
in
the
like
stuff I learned so far on the...
yeah, even like I think what you meant is like even in the counter trend stuff, you can see how even like smaller term structure, even if it's counter trend, makes sense.
Yeah, exactly. I mean,
Yeah.
obviously we missed that one if we place it on pure, pure perfection or whatever. But yeah, that's just what it is. But I will show you something crazy, which was fucking crazy. I mean, I have two more which I want to show you, but I don't know if we run a little bit late or whatever. I know guys have to go up, have to get up.
Yeah, I have to go. I have to go pretty soon.
Yeah, so
Sure,
for the
sure.
guys who want to stay, obviously you highly invited to stay. But yeah, for the guys who have to go, you have hopefully a very good example
Yeah,
of how you can do intro trading and stuff. Yeah.
yeah, if you don't mind, yeah, I think there's a buy possible. Basically, can I
On EU?
yeah, on EU, yeah. I mean, I think
Yeah, I would not
there's
place some buy right now, but obviously you
okay.
can look at this and 1 minute and see like yeah, you could see it like that. But yeah, now if you look at the timing, it's so
Yeah.
late in the day, like I will not place, and not even think about placing and trading.
Okay.
But yeah, just
I don't
the
think this is
structure.
live either, Reem. I think you need to. I think you're still on replay.
Yeah, he is.
Oh,
Yeah.
yeah, there you
And by the way, I said like I have to go pretty soon, so we're just saying like maybe we should get to the example before. I don't know.
Yeah, so you place it on this one then? Yeah, but I don't do it here.
Okay.
And also,
No, 'cause
spreads go wild in 20 minutes.
Yeah,
So.
exactly.
Okay.
So that's why we watch CJ, which I probably get up break even and whatever, just based on the spread and whatever. But yeah, don't place to buy like in this time period, like you don't really know what's going on.
Okay.
So that's why I closed out this stuff over here, because it's getting really late in the day. So yeah, you don't want to mess in this section. Yeah, but this was just EU, and you see it's, yeah, things can be crazy if you know what you're looking at. Oh, sorry, so many questions. Where did I? Sweaty palms. I covered that one. That's okay. Show us the freaky shit. Yeah, I like that. Okay. Yeah, but that was EU. Seems crazy, but yeah. I mean, GU and AU were. I mean, we'll probably will go over it a little bit quicker, just to save a little bit time. Let's do AU. Why not? Because AU was kind of funny. So we start here. Again, London is where we want to look at. So where's the thing? Just make it like this. Okay. So what we have? What is it? Froze? Please don't freeze on me. Don't freeze on me. Okay. Does it work now? Yeah. Okay, so we start again. Let's even say, and just for argument's sakes, I have to minimize. Can you speak a bit louder? Sorry. Yeah, I dropped my microphone like a few days, and now it's a little bit messing around, so I don't know what that is. Yeah, just give me like a heads up again if it happens, because sometimes it just turns itself a little bit quieter. So yeah, just give me a hint if that happens again. Okay, so even on the 5 minute, just to show you for argument's sake how you can do like the daily analysis on a daily, on a 5 minute on intraday type of stuff. Obviously we start the day here, right, in London and stuff. So we have this zones once again, which hopefully everyone knows right now, which what it is liquidity. So we want to take this out. That's what we know. We want to take it out. We don't look for IFC here or even here. No, we will take this out. So what is the next zone which could give us an IFC? Right here. So and if you look at the 1 minute in this area, that's our last possible IFC after this area. Obviously we have this one below, but this one is just fine. Okay, so you can point out this one or this one. I like this one and this one. Whatever plays out, plays out. I don't even know. But again, you see the higher picture or the bigger picture, why it would make sense to do that. We have liquidity below here, liquidity below here, and a very good point of structure IFC in here. So what I actually did, I placed the pending right here. Okay. Stop was below that thing. I think it was even below that wick. Yes. It was like that. Okay. Why? Because it makes sense now. We combine it with stuff again. We combine it with the FU stuff. You can notice right now. It could make sense if it does something like that. We don't look at here or here or here because we want to pretty much induce these areas. So this is, and we looked at it in 1 minute. I can show that once again. Why this is a good point of. You see this imbalance here, and we have a spot here. Okay, so if that one fails, it probably will go to this one. But yeah, we will only see that after it happens, obviously. Can you speak? Oh, sorry, it's still quiet now. So your process is to look for liquidity. Yes. Further. Yeah, that's pretty much how you can say it. So you should always do that. So because you would look at it like for example, oh yeah, we have an IFC here, and then you have an IFC here, and then you have an IFC here. Yeah, you would get stopped out 3 times, and that's not a good deal. It's not a good deal at all. So just always be patient of those things and be aware that this could happen. So if you only let this play, oops, and I missed my sell. Sorry for that, because I took a sell right here. Where was it? Where was my sell? I will explain it in a second. Oh yeah, it was this one. Oh man, I'm stupid. So why again? So this is a good sell. Why is it a good sell? Because what we just covered, like since we started, liquidity is building up here. This becomes your FU type of thing. Look what else it does. It gets exactly these things getting induced, and it comes right into this thing. So I missed this one, which would be a beautiful, beautiful trade as well. And again, why is it a beautiful trade? It induces this one, taps right into the IFC over here. So stop goes above this. Okay. And same thing here. This becomes your banker block because it is an IFC, like it FU candle, FU'd all this stuff, pinged right into this imbalance, gives you a really nice pending order. I missed that unfortunately, but you can see it is beautiful. I took this one instead. So you take just a break of structure, once again, break of structure, came back all the way into this imbalance zone, pinged the thing here. I think I took it from the 5, if I'm not mistaken. Yeah, I just looked at this thing here. Yeah, that's a little trick I do. I will not go into it right now, but just for argument's sakes, you can see it on the 1 minute 2. Just ping this one here. I mean, you could place it technically here, but I just wanted to make sure that I get tapped in, because why? I missed this one and I bite my ass because of it, because I missed that one. So I just wanted to make sure that I'm into this trade. That's why I placed it here. And I'm really glad I did, because if I would place it up there where you normally would do it, I would miss it once again. So that's not my interest. So yeah, I placed a pending below this one just to make sure that tapped in, and that was a good decision. But again, then you have to know where to take profit. And I hope everyone agrees and sees why this is a good trade. It's combined again the structure and the timing. So you have this London trap, timing plays into it, FU candle right into this IFC. I can make it bigger so everyone can see that. Everyone can see that. So this is your beautiful, beautiful IFC right here. And if you have a FU candle tapping into the IFC, that's beautiful. And that's exactly what it did. Missed that one, banker block, boom, took this one. So from the bigger picture now, once again, we want to induce this and we want to induce this. So my TP goes right below this, because that's for sure that we will induce this one. I'm not 100% sure about this one and not 100% sure about this one, but that's for sure that this will get induced. So my TP is right there. Okay. And again, we have this great zone, point of interest. I covered that, why it's a great point of interest, why we look at that. Boom. Straight bursted through this zone over here. So everyone looked for an IFC over here, got just crushed. If you look for an IFC here or here, you would get crushed. Even here, just melted through it. Like nothing. Like nothing. So that's some good indication that this is like huge liquidity. So this got tapped in, the pending order was triggered. And if you look the 1 minute, it did not really give us a re-entry after that. It just went flying, just was gone. So I was glad I put the pending, because this thing flew away. No giving you a chance for re-entering this thing. No chance. So that's sometimes, I think someone asked prior to this if I always do limits or I always wait for the reaction. And you see in this example that sometimes it's good that you put a pending order, because even if you have it right, it can fly just right off it. So even if you would wait it for the reaction over here, yeah, you would miss that trade, because there is no re-entry here. So you missed out a huge trade just because you waited for a reaction. But again, it's safer. It's much safer to wait for a reaction. So that's a little bit advanced. But again, it makes all sense. So I see a lot of questions. How do you know what highs and lows will be taken out? The true answer is, I sometimes not 100% sure, but you have to anticipate to take it out. I mean, that's for sure. That's probably for sure as well. If you look at it like this IFC already was mitigated. So why should it stop here? I mean, if this will be taken out just because of the structure and everything, so it does not even make sense that it stops here then. So it will take this out right away too. And this over here, yeah, that's just a fucked up wick. That's mitigated too, right? So it will take probably that out too. And if you take all these things out, the last point of interest is here or here. So if you're risky, you take this pending order, and if it stops you out, then you can take this pending order. It is what it is. You have to take risk in this game. I hope that makes a little bit clear. But yeah, tapped into this one, and it run. So yeah, insane. Yeah, it will get a little bit funnier. Believe it or not, it will get crazy. You don't have partials taken? Yeah, I take partials all the time, because at the end of the day, you want to pay yourself at least. And just think about it. If you just catch a trade like this at the beginning of the day, like you saw the EU, the 1 to 30 in like 5 minutes or whatever it was, if you just take it off all, like what is wrong taking a 1 to 30 in like 5 minutes? What is wrong with that? Just close it out. Like, what do you want? Don't be greedy. Don't reach for the stars. I mean, just think about it. If you take a 1 to 10, only a 1 to 10 at the beginning of the day like this, and you close it out completely, the next 10 trades are risk-free. You don't risk anything the whole day. So the stress level is not even there anymore. So you can do that. Obviously, some of you guys want to get these 1-to-100s and whatever. Yeah, don't do that right away. And to be fair, the account builders are the 1-to-10s and whatever. Like if you catch a lot of 1-to-10s and stuff, that's much better in my opinion than like 1-to-100, which you wait for like 3 months or whatever. So if you can take intraday 1-to-10s, yeah, that's crazy in terms of like the account getting built up.
How long have you been trading for, bro?
Sorry?
How long have you been trading for?
Like institutional style, not that long. Like like I'm July student from the bootcamp, but yeah, trading since like 2 years probably, like professionally. All before that is just like, yeah, like probably everyone here like just figuring stuff out and retail trading and whatever. But like this point of view, I just always did it, but without the IFCs. So WWA just give me the last piece pretty much with the IFCs, which cement, and now pretty much it's getting insane. But yeah, that's good. What are the best times to trade? Very good question, Mohammed. So the best times to trade, obviously London Open, New York Open, not the sessions, the opens, because you note if you backtest this like crazy, you will notice that the traps, like our entries, we can call it traps or whatever, are happening during this time. So that's London Open and New York Open.
A quick question on the area where you had the zone marked out. So
yeah, this one.
There was one, yeah, it's to the left, slightly to the left. Yeah, so we've got another low there.
Yep.
Would you consider that as a potential other inducement opportunity? And yeah, just that general area, sort of ducking below that. And I know to the left of that, we've more got sort of full body candles. But
okay,
potentially could there be?
Yeah, potentially for sure. That's where the risk taking keeps in play. Like if you look at this, like how it fell, it's almost like, and I know a lot of you guys will never do that. It's like catching a falling knife or whatever you want to call it. Like if you see this thing like bursted like to the downside, right? It just shoots into there. And a lot of you guys would feel like you're catching a falling knife and whatever, and you won't do it. That's completely fine. But what I notice is it's like part of the game, is taking risks. So if this thing stops you out, you're still completely fine in terms of structure and everything. So if it induces this again, yeah, so be it. You got one stop out. So what is like -1? Not a big deal at all. At all. You can make it back like in minutes. So you just take this again. But that's again just the part of taking risks. So accept that you could be wrong. Nothing wrong with that. Just make it back then. Okay. So is there some sort of criteria of when to set bearing extremes or pro trend maybe? Yeah, I have a huge rule set of doing that, but that probably will blow the roof a little bit. But yeah, I have a completely rule set for that stuff. Basically use pending when you've got liquidity. Yeah, liquidity is always a really good sign, but you have to combine it with structure itself. Not only just because you see an FU candle or whatever, liquidity build up, don't place a pending just based on that. See the bigger picture and then make the story out of it. It all makes sense at the end of the day. I mean, I can show you every trade I took or every trade like which played out. There's always a story behind, always. So yeah, it all makes sense. And if you figure that sense out, yeah, you can answer that question pretty much for you. It just needs time that you figure it out. It's not that that you will get it by tomorrow, but I do my best so you guys get a little bit further and one step after each other. So do you usually wait for Frankfurt and London? Yeah, Frankfurt is a very good time too. So, but believe it or not, 8 o'clock during my time is Frankfurt, because obviously I live in Bavaria, And that's just too early for me because because I'm just stupid. I like to sleep. It seems like you're, yeah, that's funny. How do you know yeah, how do you know how the highs and lows? What do you mean by how the lows are formed? Do you mean the high of the day and the low of the day? Or what do you mean? Yeah, you can call me the inducer. That's funny. I want to go back to Nikki's question for high and lows of the day. Do you use Yeah, that's a very good question. I will probably do a whole session for the high of the day stuff because this will blow the roof like a little bit too crazy for now. Because
You use like the
again,
dealing range and stuff.
I mean, there's so much combined into it. I mean, you will not believe it how much things I combine, but you have
Yeah.
to keep like the overview of things.
Because like I tried to use that before, but especially like this was before WWA, and I couldn't make sense of it. So I know there's like a dealing range, right? And then you like have that measurement, and you can like project that to anticipate the highs and lows of the day.
Tim,
I just
so,
never, I was never able to really use that. So I don't know.
Yeah.
So the way of doing that, it was the central bank dealers range between, was it 6 and 10? That obviously
Yeah,
gives
6 and 10.
generally
Yeah,
the
exactly.
kind of London pullbacks, but the flout was to do with kind of basically the highs and lows of Asia. That's why I wanted to ask,
that's
is
very
Reem
good,
using
though.
that?
I mean, did you like project that like with one? Don't you like take the measurement of the dealing range? You project it 1 or 2 or 3 times.
Yeah,
then
but
whenever
you also,
that
for
happens-
working out highs and lows of the days, you've got to then kind of start putting it with kind of like say 4-hour points of interest, daily
Yeah.
points of interest, that kind of. It's just trying to match it up along with those. Like obviously, you
I don't
have
know.
no
I haven't
idea.
had much success with it,
You're
so
just working.
that's why I
Yeah,
stopped using
I
it.
mean, you have to combine it obviously. If you just
Yeah.
use it on their own, that's not really good. But if you combine it with structure and other stuff, they become really powerful because then you know
Really.
like at which ones you should look and at which ones you should not look.
See, maybe that will make sense then, because like I have it marked. I have the dealing range marked, like on my indicator. I just never was able to use it.
Yeah, that sounds like a good Zoom for the next time, Reem.
Yeah, because I actually got to go. So like that'd be great if we
Yeah,
could
you
just do it
said
another
that even
time.
like half an hour ago, so I'm glad you're still here.
No, I just had to hear this stuff. This is good stuff. This is good stuff.
Yeah, I will hurry a little bit, but obviously I want to answer questions and everything too, and I know I will go through everything a little bit quicker, so that's probably not a good idea either. So yeah, split situations, I guess. But yeah, I'm glad that someone pointed out that the Asian range is very powerful because I use that a lot. Like the Asian low, Asian high, midline. That's some really powerful stuff if you know how to use it. And
Yeah, that's
even
how we
like,
understand using flout.
yeah, and in this example on AU, we will come to an example where I used the midline for an additional confluence of events. So that's always helpful. Yeah, blow the roof. Yeah, probably next time. Looks like it's creating lower lows on the hourly. It's still bearish. You mean like what it does right now? We will not look at it right now. I mean, we will look at this intraday example and then we can take a look at it. Did you watch equal lows at 5 AM imbalances below? 5 AM. Oh, this one. No, that's not 5 AM. This one? 5 to 7. Okay, I'm confused. I don't really know what you mean by that. This one. Oh, yeah, I was asleep during that one, but you could take this. But I will not, because it does not induce anything. I don't like these types of trades. But you can see this one works as well, but I just don't like it. They don't give you that great of a return. But just in the bigger picture, again, what does this do? It just creates the equal lows once again to get broken once again then. So that's all just built up on purpose. And you can see it gives you good reaction from it, sure, but you can see then it gets burst right through it. So for me, that's just a build up liquidity trap. So we will take that out, and we did. Can we get more calls? Yeah, I don't know. Depends on you
Hey,
guys.
bro, so like what sources, like, cause you're like, I'm like hearing most of this stuff for like the first time, like this is not taught in like WWA, like, you know what I'm saying? So like what sources do you think we should like look into to like understand the shit you understand?
Yeah, okay, sorry, can you speak that up again because you were a little bit quiet?
Yeah. So So most of the stuff you're teaching, right, or you're talking about, like, I haven't heard about it in WWA. So, like, what sources do you suggest we look into, like, to learn this stuff?
Yeah, that's I wanted to make clear before I even did calls the first time. I checked it up with Alex to even have him agree that he pretty much confirms that I'm allowed to teach that stuff because I put things into the content they provide you, right? And I obviously don't want to do that like just without asking or whatever. So I had a call with Alex and we went through over some things and yeah, he said, yeah, sure. If you want, then you can show this to the community and that's what I do right now, right? So yeah, it's a little bit overwhelming for some of you probably, but yeah, I hope I make it clear and don't make it too confusing.
Yeah, this is crazy stuff. Thank you.
Appreciate that. So
Yeah, thank you.
Yeah.
It's very, very eye-opening.
Yeah, I'm actually really glad I get
once
to
you
put this on
understand
use.
it's getting really powerful. But because as you can see, we actually never were like in the 1 hour or 4 hour or whatever, not even the 15. We did it all from the 5 minute and 1 minute because it all makes sense, right? And you can just see it on whatever time frame. And in my opinion, it on the slower and the lower time frames, it even is clearer. So that's why I always move from there. And I mean, obviously, if you're a swing trader and stuff, that's not for you, but the concept is for you. But I saw a lot of you guys wanted the intraday stuff and taking 1 to 10s on a daily basis and stuff. And yeah, that's for you then.
I mean, this liquidity stuff works, or this same concept works on like all time frames, like the monthly even, like because
Yeah,
everything's.
exactly. I just don't like to hold.
Yeah.
I mean, I went over the just to show you what I mean. Why I don't.
Because like I remember you said you don't like taking like longer term trades, but I wasn't sure if you like meant the concepts didn't work as well.
Yeah, because I never swing traded,
Mhm.
and this was my first ever swing trade, right? Like
Yeah.
not first ever, but at least like like since WWA, right? So I took this one right here, like in this week, and I held it for like whatever days it is, right? I mean, it's fucking crazy. Like I think it was like 3 weeks or whatever, and then it stopped me at a break even. Obviously, I took the buy here. I'm still in this buy. I don't even know what I do with GF, why I swing traded so much, but I mean, this only gives like a 1 to 29, and I hold it for like 3 weeks. And I do a 1 to 29, you saw it on EU in like 5 minutes intraday, right? So
yeah, like
I
it makes no
don't
sense.
see the point doing swing trading, and to be fair. So yeah, this was funnier. This was like a 1 to 100 in like 48 hours. I posted that in the winning section. That was kind of funny. But yeah, I don't like swing trading because it just does not really give me the return I want, like in terms of time. Obviously, it's a 1 to 30, but again, it's 3 weeks. Like, yeah, I don't like that. So yeah, just to clear that. Okay, but back to the good stuff here. Okay, so we have this. We got triggered, which is good. And yeah, this thing just went flying. So just let me close the chat here real quick. So this thing just flew, man. This never come back, even close. So obviously we have points of interest here, or whatever, but it never come back. So it did not really give anything else in this zone or whatever. So we look what it will do, or what's the next logical steps to happen, right? So what we will see is this and this. And we will take this out. We will take it out. That's for sure. We will take it out. And our next, is that clear? So always if you see something like that intraday, if you have a huge liquidity trap over here, you will take this out. That's for sure. Obviously it will give you like a reaction after that, but it will take it out anyway. So this becomes then a potential sell area where you can trade the reversal, and that's where I saw even a few people taking the short but that's not a good idea. So the true IFC from like intraday perspective becomes over here, but that's probably not the high of the day. But that later becomes just a really powerful trade. But the overall direction is break this structure as well. But again, as I said before, it does not make sense if it breaks this and goes up there and breaks this and goes up there to break this. No, if it breaks a major trap like this, it has to pull back. And then it will go up, react probably from this, and then it react, and then it will go up again. So it always, like, you can call it like impact and reaction or whatever you want to call it, but just keep that in mind. So we will take this out for sure. So our target can be up here for sure, because you will take it out. And after we took it out, we will get a reaction. So this is like a 1 to 30, no, sorry, 1 to 14. So yeah, just watch what it does. So again, it builds up this false equal highs over here, and again, see what it does. First, it induces people getting jumped in on the longs because it broke this structure, but then it reacts. It gives you the false reaction, so people getting freaked out and say, oh my god, my broker trade or whatever missed. And yeah, believe it or not, people place buy stops like crazy, and by crazy I mean like in the like yeah, billions. Believe it or not, you can like do a research and stuff, but that's true, unfortunately. So yeah, it gives you the false direction and whatever, but this is our target. So we anticipate that this gives us a false reaction, but overall we will take this high out. Okay, so we hold it through the false reaction and boom. So that's our TP for this one. Okay, so we could look in these areas for sell, but I don't really like it. Even like it will give us a proper reaction, but I just don't like it. Just based on this here. I rather like it over here. And this just induced this one. We expect a reaction, and long in these areas is a better trade. So if you look at this, what we have, even look at it 1 minute, why not?
Would it be safe to say that you're looking to obviously enter on fresh blocks and then exit on fresh blocks that are past liquidity in the opposite direction kind of thing? Because that's what this looks like.
Can you say that again, please?
Is it safe to say that all of your trades that you're entering, so they're all on, say, entering in on fresh order blocks or fresh IFCs, that kind of thing, and then you're just looking to exit it after the liquidity has been run on the opposite side?
That's always, yeah, exactly. Good that you pointed out, because for me it makes sense. Probably for some of you guys would hold it. That's okay too, but I just don't like giving something back. I'm kind of an so just think about it. If you hold this trade, okay, so this is a 1 to 14 where my TP was. So just for argument's sake, you expect it to go up there. It's like, what is that? What is that distance? It is like I don't even know how to measure that. How many pips is that? Is it 6? No. Is it 6 pips? Can't be right? Is it 6 pips? Yes, 6. Okay. So that's crazy. So if you hold it for 6 more pips, like that, to me that doesn't make sense, because we expect a huge pullback after we take out liquidity. So just to hold it for 6 more pips and hold it through all this pullback which will come, yeah, to me that's not a good deal, and I will not do that. So for me, I always take at least I take partials, other than, I mean, in this case I could hold it, but I just closed out majority of profits here, because I just knew that there's a huge reaction coming from it, and that's the art of intraday trading. If you take it out here, you can always enter and re-enter in this area again, right? So you actually don't give something back. You just pay yourself and wait for a structure where you can come back in or can make another entry.
When you take partials, do you have certain rules around what percentage you're taking off the table?
Yeah, good question too, but it always depends on the structure. Like this, for example, is a major trap zone. So I anticipate there's a huge pullback coming, probably re-entries in this area, and again, I give like 50% back if I hold it. So at least I pay myself and then use this what I paid myself to enter it once again risk-free basically, right? So if I take partials with 1 to 14 or whatever it is, then you can take the re-entry without even risking anything. And even if that stops you out, yeah, you don't care because you still major up for the day. So it's just psychology again. If you pay yourself, there's no more risk if you take re-entries or whatever. So that's why I do it. Obviously, for the bigger picture, I could hold it obviously to this areas or whatever, but it's not that big of a deal in terms of pips. So yeah, just pay myself with a nicely risk-reward ratio, and then re-enter it with risk-free basically, just based on the trade I just closed or whatever. So, but yeah, good question. Hope that clears it. So again, so we closed out this partial or whatever. So now what do we have? We have this thing, which probably a lot of you guys will see as an IFC. I do not, because this is a great inducement thing. So my IFC is this one. So I want this to be induced. I want to be induced. Okay. So I will not place a pending order here. I rather would wait until this minor thing is broken and it taps into there, because look at it. If you look carefully, there is still an imbalance left. I hope you can see that. So that's much nicer for me.
So in this scenario, how come you wouldn't go for the one at say 71.65, just a few pips down? Because it's basically exactly the same, right? You've got liquidity built up underneath, and then you've got kind of a fresh block. Yeah, for sure.
Yeah, that's a good point, because you can mock that out too. So
Okay,
again, you have this, you can have this, you can have this. And yeah, again, if it induces this one, it would be not a big deal. So that's, I'm very glad you pointed out. So now the confluence of event comes into play, and unfortunately I can't show that on TradingView because I don't have the tool, but I have it in my MT4. But again, that's just a confluence of events, and I hope I don't mess that up. So Asia starts right, I don't even know if the timing is right on this thing, but somewhere around here. Is that Asia? So until, oh no, I don't even know what the fuck I'm doing. No, what the hell? No, sorry, that's wrong. Let me just recheck, because it's so hard to do in TradingView. That's why I have tools, because I'm stupid. So let me check. Okay, so there we go. Let me just check. Okay, we have this and this. This wick. Yeah, whatever. I don't want to confuse myself here. So what it is, the Asia midline. If you measure the Asia session. Oh, it is this. Oh, it is this. Oh yeah, I'm not stupid. I'm not that stupid, guys. So yeah, come on. So the Asia range pretty much is from here to here. That's my Asia range. Okay. So, and if you measure 50% of that, where is the measure thing? Fib thing, 50%. So you see that there is the 50% of Asia session, right? And as I told you before, the Asia session midline is a huge liquidity trap. So you mark this out as your midline, your Asia midline, okay? But again, I use tools for that because, as you saw, I'm kind of crazy and stupid. That's why I can't do that in TradingView. That's why I have tools for it. So this becomes a huge liquidity during the day. So after Asia is induced, like after here or here, watch this area for inducement. That's very, very important. So now, if we go back to the 1 minute, we have this IFC, and what is exactly here in this area? It is the Asia midline. So now we have two confluence of events, not only one. So we have an IFC, and exactly on that lies the huge liquidity with the Asia midline. So now we have two. So that makes sense now for me. I hope that makes sense for you as well. If that answers your question. Does all your analysis start from the M5? No, my analysis starts actually with the 4 hour. But again, if you're not in a range nearly like an 4 hour IFC or whatever, yeah, just break it down to the 1 hour. If you're not near a point of interest there, then always go lower and lower and lower. Sometimes on an intraday perspective, you're not even close to any 1 hour POY or whatever. So that's a little bit hard then to start on a 1 hour. Watch for inducement. Could you cover? Yeah, watch for inducement is the stuff I'm just like told you from the beginning. Like you see this and this, the liquidity traps, and you want to induce first before getting to an POI, because they need to build up liquidity. That's how they do it. They induce these major zones first to build up liquidity, so they have a reason to move the market on those who got induced and put in liquidity. So that's again why this is a good point of interest for me, because we have the Asia midline combined with an actual IFC. So it gives me double confirmation that this is a good area to look for reversals. And again, it's below this thing, which I wanted to induce anyways. So now I combine 3 things, right? What kind of tools and indicators? Yeah, I use a lot of tools. Mostly I built myself. Like I'm a huge programmer. No, not huge. Yeah, obviously, just a programmer. But that's like, just to give you a quick background, like why sometimes I know stuff like this and shit. I probably programmed every possible retail strategy there is. And by probably, I mean literally. I mean, I had like hundreds of EAs programmed, like retail strategy stuff. And the funny thing is, which I discovered, is if you test it on a 1-to-1 risk-reward ratio, they have all, like, which is kind of crazy to me, but if you think about it, it all makes sense. They have a 50% win ratio. So you made exactly no money, which is awesome. So if you think about that, what does it tell you? So, and if you're smart enough to figure it out, you have the key to the market. And the answer is, it's all built on purpose. So if you take every retail strategy on a 1-to-1 risk-reward ratio, you would not make money at all, because it's 50%. And why is it 50%? Because it's all built. Every trend line, every support, every whatever, Fibonacci retracement, call it whatever you want, it's all man-made. And once you understand it, it all comes a little bit clearer. So yeah.
Can you like restate that again? Because I didn't really understand.
Which part?
I mean, it's man-made by like.
Yeah, you
what?
can call it institutions, you can call it market makers, you can.
Oh, so they do that on purpose to induce people. Okay.
Yeah,
So it's like engineered. It's liquidity engineered.
Exactly. The guys which provide liquidity are creating the market on purpose, like it is. It's all a game.
So here's the thing, though.
Sorry?
If the institutions don't run the markets anymore, is all of this just gonna not work?
Yeah, I mean, if that will never happen, to be fair. If that happens, then you have bigger problems than just
bigger problems. Yeah.
Yeah.
That's what I hear a lot. Also.
Yeah. So yeah, but that's like, yeah, I mean, if you just think about the number, I mean, everyone probably knows how big the market is, and I don't even have to mention it anymore.
Yeah, the world's over that point.
Yeah, exactly. But if this thing will look different one day, then we have bigger problems. So yeah,
Who's at the top of the food chain?
don't even be worried about that. So yeah.
Like, who's at the top of the food chain of the market? Like, if it's not the investment banks.
Central banks?
Yeah, I mean, I
Because they're the
don't
ones
know
that actually provide
exact guys
liquidity.
who it is, but
They're the liquidity providers.
yeah,
Central
exactly.
banks,
like
There's
currency
so many
in general.
banks and whatever you want to call it. I mean, the Fed and you call it, you name it. It's in the forex market, right? I mean, the
Like
liquidity which is provided into this market on a
Exactly.
daily basis is you cannot even imagine. You're not even like, it's crazy. And obviously they know the stuff, and obviously you know how these guys are, like how their mindset is, and they don't want people to win. They don't want people to get rich. They don't want people to succeed, and that's why the market is built like it is. It's all building in traps and fake outs and whatever. So that's why all the retail strategies, if you test, and that's what I did. I'm not pulling it out of my ass and just like say random things. No, I backed it up. So, and I can show you the back tests and whatever over years. Yeah, it's all man-made, and that's my discovery
Yeah.
I made. But yeah, that's a different story.
Actually, if you think about it, though, the purpose of a market is just like any other market. It's to facilitate trade. So honestly, like a lot of people will think that, like, I think that it's done like in like a malicious way to take your money, which could be partly true. But also, I feel like it's just the most efficient way for a market to actually do what it's intended to do, which is exchange things. Because you need liquidity for exchange, and if there's no liquidity, then the market's not doing its job.
Yeah,
So if you think about it, these areas are not necessarily where banks take your money, because they do it along their way, right? Remember, they don't do it for that purpose. They do it along their way.
yeah,
It's
that's exactly
they
what it is.
do it in order to facilitate trade, which is what a market's supposed to do anyway. So it's like market efficiency.
Yeah, and think about it like that. Like, how does
Yeah.
retail traders or even like small hedge funds or whatever, I don't even want to know. But that's just what it is. Like how they look at market. Like they see like the trend. Look at this. Even look at this. They draw a trend line like this, and they think like, oh yeah, oh my god, a rejection. So let me take a buy here. Yeah, woo, I'm getting rich. Oh my god, let me jump in with more buys. Woo! Yay! More buys. Oh my god. Not a rejection. Let me jump in with more buys. Oh my god. Oh, what happens? Oh no, oh no. Why does this shit doesn't work? Oh no. See, it's all just fun and games, right? Does not work like that. And if you think, why the fuck should the market even like retrace on a trend line? It does not even make sense if you think about it. Right? So we have this major zone here, and obviously this last IFC, which have a small imbalance, and again like huge liquidity build up on the Asia midline. So this is a good point of interest. Obviously we have this one, but this gives me much more confidence in events just because alone of the IFC lined up over the Asia midline. That's pretty if something like that happens. So you have two options here. You can either
Sorry, Ryan.
yeah.
I joined a little bit later, but a quick question. I heard you say the Asia midline. What do you mean with the Asia midline?
Yeah, good question. Is this Dennis? Yeah, right.
Sorry?
Are you Dennis?
Yeah.
Yeah, okay. I remember you from the voice.
Okay.
So Asia midline, I mean, you know that we're trading in sessions, right?
Yeah.
So, and this is the Asia high. This is this is the Asia low, and this is the Asia high, right? Just in terms of the Asian session.
Yeah.
So as you learn in the bootcamp as well, like the equilibrium, I think I cannot pronounce the name.
Yeah.
Sorry for that, but
No worries.
I think you know what I mean.
Yeah.
It's 50% of things, and that's for the Asia session. I use that all the time. I use that even before joining, right? So you have the 50% right here, right? So
Yeah.
that's becoming every day pretty much a good liquidity trap during the day, right? If the Asia session is broken to the downside or the upside. So after this, broken to the upside, this becomes a very huge liquidity trap. Okay?
Okay.
That's what I mean by 50% of Asia session.
Okay.
Then you
Okay.
ask if you came in late.
And do you is the concept like you expect the price always to drop to the Asia midline or break the Asia midline?
That's just a rule of thumb. Like if it lines up with things, it's just another
I
confluence
see.
of events. Obviously, if you only would look at that, you would get burned. But if you
Mhm.
line it up with things which would make sense, then it
Yeah.
becomes helpful. In this case, we have an IFC on the 1 minute.
On your Asia midline, yeah.
And exactly on the Asia midline, and we want to break the structure anyway. So that becomes a triple confirmation, right?
Yeah, okay, clear.
Okay.
Crystal clear, thanks.
Yeah, Ahmed, central bank algorithms and stuff. That's a huge point as well, like why the breakout stuff I always talk about and stuff is so highly getting induced and stuff, because think about the EAs and algorithms. They're all based on like breakout concepts and yeah, hard-coded stuff basically. And it's so easy to get triggered with like an EA, for example, if you say, yeah, if you see, for example, equal highs building up, if it gets close, get a sell or whatever. If it breaks a higher equal highs, get the the buy stop. That's what the EAs do, right? That's why they're always getting induced and stuff. So they don't want to that the robots, the EAs, obviously make money. That's why the market is designed like by pretty bright guys to not let that happen, right? Just think about it. Like if someone would have an EA or whatever, which could only make like 1% a day on a 100% like how do you say it? Like 100% confirmed 1% a day, that would be fucking crazy, right? So that would not wanna happen. So the biggest okay, that's all improvement stuff. I think you all agree with that. That's good. More your tools you use. Yeah, I could make that, but again, that's have to be agreed on. Like I need permission from our mentees for providing something like that, because I don't want to mix something in the strategy which is not in there by them. The moves are a bank to bank. Yeah, exactly. Remoney is made in seconds. Yeah. Angelos, I don't know about that one though, but I see what you mean. Thanks for that. Okay, let's continue. So we have this build up now. So we expect this now to get triggered. Also, the stuff is not that big. I mean, you could put it below this, but I don't like that. So I just to make sure I have put it like that. But again, you could put it like that, but that's just like too small. That's what she said. So you put it below this one, a little bit bigger, just to keep it safe. Okay. And again, we look what price does, and boom. So on a smaller time frame or smaller point of view, you have this equal lows build up right here, right? FU candle, where does it go? Boom, straight into liquidity, straight into Asia midline, straight into the IFC, and if you put your stop right below this thing, you would be fine too. You get scratched to the tick probably for some sweaty palms, sweaty pants. So yeah, but I put my stop just below this one just to make sure. And yeah, that was that. So if you don't like this entry, just wait for confluence of events, how not sorry, break of structure and stuff, like Alex always teaches it. So you have this build up here. So if we break this structure above, we probably will get a juicy re-entry, which I took. That's right here. You can re-enter it right here in the imbalance. By the way, that's a little bit safer than this one, just because you know exactly where your risk is and stuff based on structure. Now you have confirmed everything, not just so advanced by now, just to make it a little bit more safer and take it after the break of the structure and stuff, how you learned it from Alex. And there we go. Got some sweaty pants again, but nothing to worry about. And there she flies. So now it's up for target picking. We go to 5. So what we have? If we just look at this, we have to make it a little bit bigger than that. So now it's again 1, 2.
Wait, Reem,
See that? Yeah.
can I ask something?
So
Are you getting
we
into any
marked
nitty-gritty
this
stuff?
out previous, right? So this becomes like a good trap zone, but probably will not be the high of the day. But we have to keep that in mind if we look for targets from this thing. So my target will be below that thing, so right here and right here. So makes it like a 1 to 15 and 1 to 10. Why not, I guess. And then we actually could at the same time look for re-entry. So if we look at the 1 minute and this thing, and we actually could keep it like that. So you see this is probably the last candle, which gives you the liquidity, huge imbalance over here.
Hi, Raheem. You're so soft spoken. Can you speak a bit louder?
Oh yeah, there we go. Sorry about that. Again, my mic just dropped a few days ago and now it's messing around, so
Okay, thank you.
I have to fix that. Yes, so if that happens again, just speak up. Sorry for that.
Okay.
Also, one question. Are you getting into any like nitty-gritty stuff today, or is this the last thing you're gonna cover?
Yeah, probably as it gets a little bit late, that's probably it for today, but we can do some questions after that.
Okay, so I'll go then. All right. Thank you so much.
Yeah, have a good one, and I'm
Yeah, you
glad
too.
you stayed so long because you said
Yeah,
you wanted
thank
to
you.
go like
Yeah.
a long time ago.
Yeah, I don't want to miss the other stuff. So. All
Yeah,
right.
but that's
Peace
just
out.
some intraday trading, like end the day and stuff, and
Mhm.
some more pretty clear trades. But yeah, you caught the most important thing by now.
All right. Cool. All right.
So have
Peace
a
out.
good night, man, and cheers.
Yeah, you too.
See you soon, man.
See you.
Okay, so for the guys which have a little bit more time, so that's probably our last point of interest right here. Stop can literally go up there. Obviously, we have an imbalance over here, but that's again something for probably later or whatever. But this is a very good thing. You can mark this too if you're happy about it, but just keep in mind that this is a very powerful graph as well, and it could play out from this one or this one. So yeah, again, take the risk, take this one. If it fails, move towards this one. But again, by now you're so much up for the day. Yeah, you can calculate it by yourself. So that's not a big deal then, if you get one minor hit. So if we watch what price action does, whoops. So okay, you can literally possible, like on a intraday perspective, if you know what you're looking at. So if you can just unmute yourself and ask questions and whatever, but for the stuff, that's pretty much it. And you see, yeah, I mean, I want to show you like one more currency pair, but I think we're getting a little late, so I think that's probably it for today, other than questions and stuff. So yeah, we can cover that. Any questions about the stuff?
You can do one more, just quick.
I don't think it will be quick though, because it's a whole day.
I'm going over GU where most of us got stopped out.
Okay, we can cover it quick.
Thanks.
Yeah, for the guys which have to go, good night and thanks for joining in. We can cover it quick. So GU.
Yeah.
Sorry?
Yeah, no, I was just about to say some off-topic shit actually, but I took GU today. It stopped me at break even, then
Yeah,
I
I saw that.
re-entered.
I saw
Yeah, and then I
I want to
re-entered,
write
and I was like,
that's not a good idea, but I don't want to be that guy and stuff. So
no, but if you see something and your opinion is different from mine, please
yeah, but I will
just
not
tell me.
do that because your analyst. I mean, you saw it right, and it was good for some pips at least.
Yeah.
But in terms of the bigger picture, it was just not like the right way to look at it.
Yeah, exactly. And after that, I got in a bias, but yeah, I was just my head just played a little bit with me, so I closed my bias and then went up like 40, 50 pips, something like that. So yeah, GU played with me today.
Yeah, GU was a little bit tricky.
Can you start from 4 hours, please?
Yeah, sure.
Yeah, Reem, I just want to double check on that. Just before you're getting into the day, to get your daily directional bias, are you basically just looking for the nearest 4-hour block or like 1-hour block kind of thing?
Yeah, for example, if you look like here, right, we are on the day start is right here. So you have this.
That's cool. So you're just looking for basically 4-hour, 1-hour imbalances and the blocks, the IFCs that go with it, right?
Yeah, but the next 4-hour would either be this, which would not even make sense, to be fair, or this, right? So yeah, that's not a good point of interest, right? And the day start and whatever, like 3 o'clock, that doesn't make sense. So I won't look at this one.
Would you
This
not
one
use
would
the
be the
4-hour
next one,
that's
or
just
this
closed, the nearest down close?
Sorry?
Would you not use in this scenario? You're saying obviously you got the one at the extreme, but then you've got the 4-hour that's like 2 candles back from where we're at.
Yeah, so just saying that this would be a possible one, which is not that great anyways, but just for argument's sake, and this would be the next one, which is miles away, right? But this doesn't play any impact. So if you go to the 1-hour, so now things get a little bit more interesting. So we have this one below, which we missed. That's not one. Then you have this one, which is not a great one in my opinion, and then you have, I mean, as well, guys, putting it in here, which is not a good idea in my opinion too, because you just think about it like now that, like how I started the call, it has to induce first in order to be a good point of interest. And now you have to go a little bit lower. What does it induce in the way up there? It induces nothing. Nothing, because there is nothing to induce. It's just a solid going downward. So the only thing that they can do induce is this spot itself. So if you look for an IFC in this here, yeah, you would have a hard time because they will induce it. They will give you an erection from it just to get you excited and whatever, but there's no inducement going on. So, no.
Hey, Reem, would you be able to do a top-down analysis of quickly from, say, the 4-hour down through to the 1 minute for like what you would be looking at?
Yeah, I pretty much did that like with EU and AU, if that was your
Oh, sorry, I must have missed it. I jumped on late. Sorry, man. It's all good.
Okay, yeah, but that's what we did like the last 2 hours.
Okay, sweet. Sorry, I jumped on like 5 to 10 minutes ago. All good.
Okay, yeah, okay. But we will go through some setups into you anyway, so maybe that at this if there's no inducement going on, and there's just nothing induced. Like, how many buyers are in this area? Like, probably not much, right? So the liquidity is very low. So if they reverse here, they don't really have a good reason for do that. But if they break this, like, just imagine how many buyers are in there now. Like, because a lot of breakout traders, some people see the structure break or whatever. So now we have a lot of buyers jumping in the market after we broke this. So it only makes sense to break that. And even on an intraday perspective, sorry if I'm not kind of explain this in great detail now because we're running a little bit late and stuff, but that's not true. I mean, you have this this building up and this building up. So you expect the FU candle to happen this all way. You expect, and you just have to expect it. That's the only thing I can say about GU, because that's just not a right way to look at the chart. If you say this is my POI here, you have to expect the inducement. That's what they do all the time, and if you backtest that, they do it all the time, and that's why the most of you guys like get the wrong POIs, because you always want to look at marking moving to POI to POI to POI to POI, which obviously is not what the market does. So it was that. Not even a pencil. But yeah, the market does not move like that. Like from POI to POI, from IFC to IFC to IFC to IFC, it does not move like that. It would be awesome if it would, because then we would be all crushing it like crazy. But unfortunately, that's not what it is. So you always have to expect the inducement phases and whatever. So and GU was probably GJ was the best example of inducement. Why you should not? But I covered that the beginning. Let me see what the hell is going on here. APY.
Yeah, I'm having a hard time. I mean, I was in the first call where you explained inducement, but I'm having a hard time spotting it myself, to be honest.
So if you compare it to GJ, like look at all this liquidity building up over this, equal highs, and even over this. So it does not even make sense if it checks one more time from here then. It has to break at least these equal highs and in best case this, and that's exactly what it did. So it has to induce before a drop. That's the rule of thumb you can note yourself or write down wherever. It has to induce before a big drop happens or whatever. Obviously this is a different story because this becomes the banker block scenario. But again, like the banker block already happened, it won't happen a third time. It can happen twice, yeah, but a third time, no. So, and if you have a huge equal highs over here, it will take it out for sure. And in this case, what else did it take out? Like on the way over here, nothing. There's nothing. There's no inducement, nothing. So this is not a good POI. It has to induce it, and we look for POIs over here.
So a inducement is basically taking out equal highs or equal lows.
Yeah, equal highs, or in this case, like a major liquidity trap. Just think about how many people have their stop, like they sold it, like the stop over here, or have buy stops getting triggered, like breakout traders or whatever. Like structure traders seeing this as a break of structure and now have their bias long and whatever. That's why the rejection happens.
Okay, cool.
So that's better to wait until this happens and look. Like this was hard to trade though. But I took it anyways.
GJ was clear. I had the 3 minute. I think you took it off the 3 minute IFC on GJ, didn't you?
GJ?
Yeah.
No, GJ I took from the 1 minute.
Like, oh yeah, I the same plan from the 3 minute. Yeah.
This is the equal highs. This is the equal highs, and the last imbalance we had on GJ was.
Sorry, I'm disturbing your flow probably, but.
Not at all. Glad that I can also question here. What's going on here?
Yeah, I was expecting the same thing to happen, to take out the liquidity, and then I wanted to play it from the 3 minute IFC, but I forgot about it. Honestly, I just seen on your chart that it play out.
So if you look at the 1 minute, GJ. So we had the last point of imbalance here, right?
Yeah.
So we
that one broke structure, so.
Yeah, they tapped right into that, and I took it after the retest. So it was a retest, and I took it the retest. So I put my stop right above this thing, and so yeah, it's still missing. I'm still obviously in this trade. Probably will get a break even because of spread or whatever. Yeah, because now you're getting into this critical time. I want to hold this, to be fair, but yeah, it's just messing around like crazy. I don't know. But at this stage, I don't care. I expected to go a little bit more lower than that, but it did not. Oh, sorry for the volume. I have to fix my mic for sure then. Crazy that happens all the time. Yeah, but that was cheat shade. But again, the key point to this thing, or to this whole scenario, was the equal highs needs to be taken out first. See, there's a big FU candle thing. Like equal heights, FU candle, and taps right into the POY in the 1 minute over here.
Yeah,
Not
clear.
this one too, because it will get taken out too.
Yeah.
And if you're not sure, then take the reaction, which I took.
Yeah. Okay, clear.
Okay. But GU, same thing. We need an inducement first, and now you can look for like a smaller time frame POY after the inducement happens. So it's probably lying in this thing right here, right? Or in this thing right here. So you break it down. So you have this right here. Pump it up. Or this right here. So for argument's sake, let's pick this one. With the last imbalance here. So your POY goes here. Right? Then you get tapped into it, right? Then you can create the reaction from it. So you got tapped into it, you have equal highs, FU candle, and you just simply can enter it in this candle after the equal highs, FU candle happens in your POY. And again, if you waited a little bit longer, it was a little bit harder for re-entries because it did not really give you one. So that's really the only option you had. I took that one right here in this candle after the equal highs, tapped into the POY, FU candle, take out this too, and retest, stop goes right above there. So that's the way how you need to take those. Like wait for the equal highs to get tapped out, look for a POY, look for structure, look for the retest, and execute. Okay? Hope everybody
Yeah, clear.
sees
Yeah.
how that works. Okay, so it's actually pretty late. We took like 2 hours. So yeah, if anyone has some more questions, we could highly gladly can cover them. For everyone else who needs to go to sleep and whatever, thank you for joining in. Always welcome. And yeah, obviously if you have some questions left, we can go over them. But for in terms of content or whatever, that's pretty much it for now then. Would you say that you will not take a trade that mitigates an IFC without liquid? Yeah, that's pretty much what I did for testing purposes. I pretty much always took like IFCs just to get a feeling for it and whatever. But if you combine it with the liquidity, first of all, you get more stop out because you're getting more selective. Then you combine it with structure itself. And obviously it makes more sense because there is a reason, not only the IFC, because you can see IFCs everywhere, like this for example. Yeah, sure, that's an IFC. Yeah, but it does not matter if it gets up higher anyway. You understand why? That's an IFC, no doubt about that. But why should they reverse here if they want to go a little bit higher anyway? So that we just smash through it like that is. But yeah, that's an IFC, but you just don't trade it just because of the sense. You don't have liquidity build up into it. But now, after you have this equal highs build up here, you have this trap zone here. This trap FU candle everything of that, boom, and straight into the new POI. Now you build sense into it. Okay. Yeah, Ben, you're welcome. And why did you choose that imbalance on your purple box? There was also one imbalance below you. Okay. So I always break it down like to the 1 minute, just to have a little bit more clear look at it. So which one do you mean? You mean this one? So if you mean this one, you have to know that it's always better to go from the higher one, right? And again, you want to induce this point anyways. So why not? I mean, that's always like the structure thing. They want to induce as much as possible without going to induce this one then. So if this is the true thing, they want to induce as much as possible. And this is also like you can see the small like resistance, whatever you want to call it, they want to induce it. I mean, it sounds like a minor, small detail to you, but in terms of money, it plays a huge role. So if they are in an FU candle, which we had to the right, they want to take out as many liquidity as they possibly can without taking out this, because then it would evaluate the whole concept, and we will look to the other thing, right? But if it is this one, which we don't know in this fact, it could be this one as well. That's why you have to the risk taking thing gets into place. That makes the most sense because they take out this, and then they ping exactly the IFC and did not break this one. So that makes the most sense. But obviously, if they break this one, you have to wait until they fill this one as well. But in this case, they did not. So that was the true IFC over here then. But that's just how you break the things out in the 1 minute. Obviously, you can go from the body anyways, from the 5 minute. That would be the same exact area. Then, if you choose the body for your POI in the 5 minute, you will get the same POI. But I usually want to get the sense a little bit more. I think we'll have enough. What do you mean to not worry about it, Dennis? Michelle? Yeah. Okay. If you personally measure through for the recording rather than post it? What do you mean by that, Michelle? Yeah, I mean, did someone record that or what? I hope not, because that's the same thing like the WWA stuff. So if that's getting leaked, we will get in trouble. That's for sure, because obviously that's the WWA stuff as well. So better keep that for yourself if you recorded that, and better not post it in the community, because obviously that's not what our mentees want. And obviously if that gets leaked, we will get into trouble. So we don't want that. Why do you choose the purple box and no others? Is that no? Like, it's always like it's always based on structure. Like, once again, so if you induce that one, the chances are great that you induce this one as well. The next really good IFC, like this is kind of the volley block type of thing, and the next one would be up there. So you work your way through, right? But again, if you combine it with the 1 minute structure after you hit the POI, it makes more sense, because now you have the liquidity build up here, the equal highs. The FU candles tapped into this POI, and you're not taking it right away. You not put a limit at this POI. You wait for the reaction. So you have this equal highs FU candle, and then you can trade the reaction after that. So the entry is here, not here or here or here, not into the POI like after the reaction happens. Look at the reaction it gives you, and again the structure is the most important thing leading into it. Look at the smooth thing just shooting into this POI, and then always for some reason it kind of stops. So that has to say to you that there's a huge ton of liquidity trapped inside here that the market getting to stop. So that's why you know.
exactly with what I was saying earlier when we're on the euro dollar trade about the kind of the quick run up into the point of interest.
This one?
Yeah. Obviously, it's a lot different on, say, on cable, but it's that whole thing, right? When you start seeing it
Exactly.
really ramp up really
Thing.
quickly.
Obviously, I don't know if you were into Coleman. Yeah, obviously you were because you want to say it. So, but yeah, best re-entry would be here, but that got missed by a tick. So yeah, but that would be a very good re-entry. But again, it's based on structure.
Yeah, no, sorry. What I was meaning was the actual candle running up into it, that FU candle kind of thing. Like
yeah,
if you're looking
straight,
exactly,
crazy candle.
you got it.
Like
you got
huge. Yeah, exactly. Like that's the candle you want to see for FU.
Yeah.
Like without like yeah, just crazy candle. Exactly like that. There you pointed it out. That's it. See, we're looking at. Yeah, exactly. But right, that's the best option I found so far to find the true IFCs if you line it up with liquidity leading into it. Because if you don't do that, you will find IFCs all over the place and you will get confused. But if you line it up with structure and sense, then it will be a lot more clear. And always keep the rule, like I said, you look for inducements before you look for a point of interest. Obviously, you will miss some trades, but you're always safer. And you have to decide for yourself if you want to trade less, but trade a little bit more safe, or just take every possible IFC you see and obviously get a lot of stop loss as well. For sure, you will get some right, but yeah, I don't like that. I just want to make a little bit more sense. And you can see that's all sense-based trades. And you can take like 5 or 6, 7 trades a day on one currency pair, like with 1 to 10 at least. That was a 1 to 30 in like 1 hour, right? So if you just build the sense into them, be a little bit more picky about your trades, that's the way to go in my opinion. But obviously that's up to you, and if you want to trade more, you can choose other IFCs. But yeah, exactly those are my points. Yeah. Yeah, if you leak some stuff, you will be in huge trouble because you signed an NDA, and yeah, if stuff getting leaked, you're in huge trouble. You're paying like 6 figures for sure. So better think about it twice. Don't do it. Just don't do it. That's not worth it. Similar to UCAT. Okay. I just believe that we shall I will not look at it right now because I don't trade UCAT. This is a quick run, the run into liquidity. Like the liquidity grab, if you want to call it, that's always like this candle. Like that's always huge, quick candle. So like like I had a saying, like way back when I started, like figuring the stuff out, the fast move is the wrong move. So if you have a fast move going into a trap zone, that's usually just a trap. And just think about the psychology over like candles like this. If someone watches the market, like breaking this high with this crazy candle, they're getting so excited and think like, oh my god, it runs so quick, it breaks without even wicks. Oh my god, let me jump in the buy because it broke the structure. Believe it or not, it sounds crazy, but there are millions of people doing that crazy stuff. So yeah, it's not only that it's a huge candle, but it's just psychology. If you see candles like this getting attached, and yeah, it's getting your attention, right? So that's why they throw in like candles like this as FU candles. And just look at it. They build it up like so easily. Like if that would be the move, just to trap you and just to fake you out, and then the move is down, right? But again, you can take it both ways, and that's what we do in the best case scenario, right? So you take the buy here, get out here. I went over it like a few minutes ago, and you take the sell, and you ping pong it like Alex said.
Thing is with that, if that was the move, then they wouldn't leave all those imbalances on the way up, would they?
Like this one?
Yeah. Like if that was really the start of the proper move, then the likelihood of them leaving all
that's
of
a
those
very good point.
imbalances,
Yeah, I like that.
It's not going to happen, is it?
That's actually a good point. Yeah,
You look at
because
like all the start of like say all the big 4-hour moves, all that kind of stuff. They leave like tiny little
yeah,
pockets,
exactly.
and then obviously go and fill them back later on once they've put enough positions in. Like as you say, it's building it up, right?
Yes, that's actually a very good point. I like that. Yeah, but if you just look at imbalances, that's good if you know what you're looking at, because you see it's all imbalances. They get filled, get retested, reaction, boom, 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 and so on and so forth. Obviously, then the day is over, so not really much going on over there then. So I do think liquidity creates before the big move in 3-2. Yeah, see it like trap zones, then leading liquidity into the trap zone and then take it out with one FU candle and then they move in a different direction. I trade now 7 pairs. In your approach, should I 3 or more than? Yeah, exactly. I was this kind of crazy person which I thought like, yeah, let me look at all currency pairs because I will take every possible trade. Believe me when I say you, less is more, and you can see it here, because just think about it. If you monitor price action about all this, how the hell would you manage seven currency pairs like while doing this? Obviously you are in trades and different pairs and stuff, and you have to manage and have to look and whatever. That's just enough. That's just too much. Obviously, if you trade higher time frames and only have to look at the price action like once in an hour, then you can trade 16 pairs for sure. But if you trade intraday, yeah, like less pairs are good. I trade 6 though, but yeah, obviously start with less and try to get used to the stuff. Can you please share the screenshot of these entries on the... Yeah, which entries? Alex. Obviously, I don't want to spam the chat anymore because I post a lot of stuff and I see people getting a little bit annoyed of it, so I don't post my trades anymore. But yeah, I posted probably like 50 trades already with exactly trades like that. That's the screenshot of M1 chart. Yeah, I can show you. Like, still in EU, believe it or not. I can show you. Like, what exactly wanted to see? Like, just my entry on a 1 minute? Or not? Would you have taken every one of the trades today? Not every, but almost, yeah. Believe it or not, but that's what it was. Crazy day. But for now, I only show like the 1 to 10s and stuff, so that's kind of... Switch to... Oh, you will... Oh. Is that what it says? Oh, that's what you want to see? Like something like this? Oh, I thought you mean my MT4 entry. Got confused here because obviously I can show you that too. Oh, okay. I thought you want to see my entries, which obviously can show you as well. But there you go. Yeah, but I tried this stuff. You saw it. I don't really hide anything or something. So, any more questions? Because it's late and I don't want to hold you guys up. I know Esther wants to sleep. So don't get her annoyed.
I don't have a question, but I just want to say thank you on behalf of everyone. I'm sure everyone says thank you.
Yeah, highly
Yeah,
appreciate
thank you. That was very good.
Cheers, fella.
I got some back testing to do, I guess.
Yeah, it's all about like back testing and stuff. So
Keep us
yeah.
updated on the highs and the lows of the day chat that you want to have, because yeah, definitely keen to listen in on some of that.
Yeah, but just once again, this is just to show you guys like what you can do. Like you all know the same things. Like it's just about practicing it a little bit more and have a little bit more understanding. Because again, I noticed some of you guys getting a little bit like demotivated if they trade and they hit a stop or whatever. And yeah, that's why I do that, to show you that you just have to stick to it. And yeah, once you figure it a little bit more out, because you're so close, the IFCs and stuff is the way to go. You just need to look a little bit more into the detail, and yeah, you can see what is possible on a just a daily basis on like a few currency pairs. Like just calculate 1 to 30, 1 to 16, 1 to 14, missed that one, 1 to 7, and 1 to 4. Like just on EU, right? What else did we cover? AU. So 1 to 14, 1 to 7, 1 to 14, 1 to 15, 1 to, what is it? 1 to 16, 1 to 6, and a 1 to 16. And that's just 2 pairs. Like, what else do you need? Like, seriously, just stick to the concept and practice it. It's worth it. See it. These inducements appear every day, and obviously, if it's not like that's just a rule of thumb that it's London and New York Open. Obviously, it's not like that, but it just gives you like an good point where you should be at charts. And if something happens in this time, then you know you have a better confluence of events. But I give you a hint, London is actually harder to trade than New York. So if you just want to start out with this concept, start with start with New York. Because London is a little bit more advanced. So if you want to play it a little bit more safe, trade New York. Grant, you're more than welcome, man. Yeah, freaky German shit. Oh my god. As long as you don't read it negatively or anything, I take that. Bavarian, I prefer Bavarian though. Can you please continue to share your entries on Discord? Yeah, Alexandra, I just noticed a lot of people, not a lot of people, but a few people get like confused and I know some of you guys are not like that, but a few people are, and they're feeling like this jealousness or whatever you want to call it, and I don't want to cause anything like something like that. So yeah, if you want to ask something, we can do calls and whatever. But for posting chart, I mean, I showed you like 50 trades like every day, pretty much, like 1 to 10s plus every day. So you see, it's possible. So I mean, you get it by now, I guess. Maybe we can do another expected call. Yeah, I mean, sure, the demand is there and stuff, but just know that this is a lot of work and stuff, so yeah, not highly frequently, but yeah, sure, we can do some another. Last question. Which pairs you would recommend to start with? I pretty much can say you my my pairs I pick. It's just EU, GU, AU, EJ, GJ, GF. That's my base pairs. So EU, GU, AU, GJ, GJ, and GF. GF is GBP Swiss franc. Then gold, I don't know if you want to count that in as a currency pair or not, but gold and US 30. So basically 8, so 6 currency pairs. So yeah, guys, if that's it, I don't see any more questions. So thank you for joining in, and obviously if you enjoyed it, throw it in the Discord or whatever. It's up to you, but it motivates me to do another one. And obviously if it helps, let me know as well. And yeah, have a good night, everyone.
Good night, and thank you so much. Thank you.
Hope you caught something good today. And tomorrow you will crush a little bit more. And Esther, thank you for providing the call once again.
It's a pleasure.
So have a good night, everyone, and see you
Good night.
tomorrow.